So let us start the revision of the next area called as debtors management. This has been consistently requested by the students to cover. I don't know what grade they found in this chapter, nothing great actually. Sir, still, student is always a student. We have to think from their point of view. Sir, you can understand, but we can't understand. Na? Sorry, I respect your exam pressure. I will be taking this particular chapter this time because in any of the previous attempts, I just explained the idea behind the debtors management and I went to the next one so the student will understand. But lately I realized that no one is understanding this. So therefore, let's not take a risk. Let us start with revision of debtors management. Even before starting the revision itself, I'm making it clear. This revision will be a lengthy revision. Means what? I will cover all the concepts in my book. In my book, I kept around 10 different types of questions. How many? 10 different. I will write on a bond paper. Stamp paper I will write and sign. Question in exam cannot go beyond that. 1000% my guarantee. I repeat again. Question will not cross the boundaries. If I draw a Lakshmana Rekha for this chapter, okay? A question in ICI cannot cross that. But all the questions in the material you have to do. Because I brought the best compilation of debtors management questions. I have written the question also in my book, such that you need not refer to any other books. Clear? What is the name of the chapter? Debtors management. Okay. I will cover the revision of this chapter in 2 parts. Today one part, tomorrow another part we will cover and we will complete entire debtors management area. First of all students in live, give me one yes. Okay, what shall we begin? Okay. See, what I will do is, since it is a revision, it's not a revision completely. Okay. I will give time for you to read the concept in my notes, but I will not give time for you to write. Okay. I repeat, I will give time for you to read the text, but I will not give time for you to write. No, sir, I wanted to write. If that be the case, you write down after the class, pause the video. Okay. I will upload this on YouTube. You can just pause the video and then you can write. Are you clear, everyone? I'm talking to you, everyone. Yeah. So, let us begin our discussion on debtors management chapter. See here. What is this debtors management chapter all about? Let us understand that. See, debtors management chapter is revolving around one concept called as whether to entertain debtors in a company or not to entertain. And in simple language, whether to have a credit sale, not to have a credit sale is a discussion in this particular area. Doubt will obviously come to everyone. Sir, if I have debtors, what is the advantage and what is the disadvantage? Listen carefully. Always, debtors is nothing but blocking of your cash. Blocking of your cash. Listen, I will give you an example. If you have debtors, there is a problem of bad debts. If you have debtors, there is a problem in collection cost. See, if I don't have debtors, on counter I will sell the goods. On counter, I will sell the goods. What will happen if you sell the goods on the counter? Person will come, pay the cash, take the goods. There is no risk of default. Okay. But in case of credit sale, he will take the goods today. He will pay after 30-40 days. After 30-40 days, he may not be in my place. It becomes a nonsense for the person to collect that particular money. Yes or no? Everyone. Answer. Therefore, because of having credit sales, debtors gets generated. Because of having debtors, company has a bad debts problem. Company has a recovery cost problem. Which problem here? A recovery cost problem. What do you mean recovery cost problem? Whenever credits are given, like credit card, etc., what will happen? One person has to go home to home and start collecting. In one movie, Karthi will be working as a credit card recovery agent. So he will be crying after seeing their situation at home. Do you understand my point or not? So after seeing the situation at their home, he will start weeping. These many problems are there inside their home. How can I go and collect the credit card collection from them? So the point what I wanted to tell is, listen carefully. Credit cards are credits whenever you give, it becomes a nonsense. Yeah, for collection, you have to put one person, one team will be there. In the cinema, he will show na Karthi will have his friends. Already their friends are there. He joined the team. That means for the team, our company has to pay money or not. That's called as a recovery cost, collection cost. So the point is, try to understand clearly. Whenever debtors are there in your books, credit sales is there. Whenever debtors are there, bad debts problem is there. Recovery cost also is there. Which cost? Recovery cost. Beyond anything else, debtors will give one dangerous thing. Bad debts may not be there. Promptly, people are only coming and paying me. Okay, bad debts not there. People are coming directly and paying me. Therefore, recovery cost also not there. But one cost will 100% be there. That's called as loss of interest. What is it? Loss of interest. I will call it opportunity cost because of debtors. Opportunity cost because of debtors. Sir, what do you mean opportunity cost because of debtors? If debtors are not there, directly cash sale will happen. 1 lakh sale will come into my hand today itself. But I have given a 60 days credit period. Means today rupee, I will not receive today, I will receive after 60 days. I will receive after 60 days means what you have to understand here, my money is blocked for 60 days, on that I am losing interest. So debtors, okay, debtors will have three things which will be the cost because of doing credit sale. These are all disadvantages of having debtors, disadvantages of having credit sale, disadvantages of encouraging the payment of money after a date. But why companies are doing credit sales? All companies are allowing credit cards. Why they have to do? Reason is very clear. It will increase the volume of sale. If you tell pay and take, 100 people will come and take. If you tell take and pay later, 10,000 people will come and take. That marginal increase is there, na? That's because of credit you have given. Now in this chapter, we are going to discuss and compare whether to give credit, not to give credit. Next discussion. If to give credit, how much to give? Discount policy discussion we will do. After that, they are not paying. We have to recover. Recovery procedures we won't do. We will give to some other company that's called as a factoring company. That's the third segment discussed in this chapter. Have you all understood the discussion clearly or not? Everyone. Answer everyone. So answer over. That's it. This chapter. In this different discussions we are going to do. Okay. Na? So now in nutshell, if I have to tell what is the chapter all about, it is nothing but cost benefit analysis because of having credit sales and debtors. What are the benefits? Increase in the spike. That means the spike will be there in the sales. Okay. Without credit, 100 people will come and buy. With the credit, 10,000 will come and buy. That extreme spike is there, na? That's because of credit. That's because of credit. Okay. So you go to any electronic gadgets in India. In India, you go to any electronic gadgets, especially Apple showroom. If you go, daily they will do 10 lakh business. 8 lakh business will be on credit card. 2 lakh business only will be on cash. If Apple comes to India and said, we don't give credit, pay and take, next day Apple will close. Agreed or not, everyone? Agreed or not? Answer. That's it. And if, for example, I wanted to buy an Apple iPhone, yeah, okay, 16 Pro Max is 1,70,000, and 1,70,000 we will pay out of cash, when there is a chance to do a credit. That's the point. If really all entities in India say take and pay and take, no credit, that's it, gone, next day gone. Sorry, phone okay. You tell me, I will ask a question. I wanted to buy a car worth 20 lakhs. Okay, 20 lakhs. People will go with the cash bag of 20 lakhs, give 20 lakhs to the person and then take the car, or from bank account check 20 lakhs check they will write and they will give a 97 to 99% of all automobile companies are giving goods on credit. Agreed or not, everyone? Now you have to tell me. Now you people have to tell me. Now you people only have to tell me. If automobile company says that pay and take, next day will any automobile company survive? Zero sales, not one car, zero, literal zero sales it will happen. Ante survival is because of credit sale. This is a subject matter of our discussion. I'm talking to you, everyone. Clear? So today credit sale debtors management is not an optional chapter. It's a mandatory chapter because most of the industries in India are running because of credit. For example, if automobile sector says pay and take na, next day go. Housing sector, pay and purchase house na, housing sector gone. Electronic gadgets sector, pay and take na, that is also gone. Who will survive? Vegetable vendors, small grocery shops will run. Remaining all the shops gone in India. That's all, out of window. Clear? So this chapter, we are not going to tell whether to take credit, whether to give credit or not. Yes, we will analyze also that angle. Whether to go for a credit sale, not to go for credit sale, also we will analyze. But that is not the main subject matter. We are going to evaluate the benefit. We are going to evaluate the benefit. If credit sales are given, what is the benefit? Not given, what will happen? How much benefit is coming because of giving credit sale option? These are all the discussions we are going to make in this particular area. Everybody understood the point clearly or not? If you say yes, we'll start doing the notes. Okay. Now, see here. Debtors arises due to credit sale. Having debtor has its benefits as well as costs. Benefit: credit sales will increase. Credit sales increases the sales volume and in turn contribution. Sales increase means what will increase? Contribution will increase. Okay, next. Costs. What is the cost of having credit sale? Bad debt is the first problem. Collection is the second problem. Interest loss is the third problem. Okay, see. Next, debtors. Debtors can be calculated using a formula. Credit sales into DCP by 360. What is DCP? Deputy Commissioner of Police. Then debtors collection period. Debtors collection period. In simple language, I have to tell. Debtors collection period means how many days of credit you are giving. 3 days credit I will give. Means today's money will be blocked for next 3 days. Tomorrow's money will be blocked for the next 3 days. Means at any point of time, 3 days money will be blocked in the form of debtor. Total money 3,60,000. 3 days on 3,60,000 is how much? 3,000 rupees. Means 3,000 rupees is debtors at any point of time in my company. Everybody understood the point clearly or not? Okay. Or another way also you can do. Credit sales. What is the formula? Credit sales into DCP by 360. Yeah? Instead of doing this way, you can do in another way also. Credit sales by 360 into DCP. Answer will be same, but interpretation will change. What is the interpretation of this? In 360 days, 3 days is blocked in the form of debtors. Blocked in the form of debtors. So 360 days credit sale, 3 days credit sale is blocked in the form of debtors. So what we will do? 3 divided by 360, 0.08333 into credit sale. How much? 360. We got 3000 answer. Correct? This is one way. But more ideal way of understanding is I will do 360,000 credit sale in a year. In a year of how many days? 360 days. So, and per day how much credit sale I will do? 360 divided by 360. Per day 1000 rupee credit sale I will do. You only said 3 days of your credit sale will be blocked every day. So into 3000 is the answer. So this is a more ideal way of understanding, but both answers are same. 3000 answer will not change. Did you understand this way and that way? Both are not, everyone. Okay, done. So this is one part of discussion. Okay, see here now. So for example, annual sales is 360. In that 3 days is collection period. Means what? Today if you sell, you will not take the money today. You will take that money 3 days after. Okay, you will take that money 3 days after. And today's money is not collected today. Today's money will be collected after 3 days. Means your money is blocked for how many days? 3 days it is blocked. Per day 1000 rupees you will lose. 3000 rupees will be in the form of debtors at any point of time. Okay, see. Okay, I will give you an example. Yeah, okay. 7 days in a week. No public holidays for debtor sales. Na? Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. Sunday, I made 1000 sale. Monday, I make 1000 sale. Tuesday, I make 1000 sale. Wednesday, Thursday, Friday, Saturday. See now how to understand. This 1000 rupees, okay, will be received on Wednesday. Because how many days of time I have given? 3 days. Sunday you have taken a Monday, Tuesday, Wednesday you should come and pay. Understood? So now you will get a doubt. No, sir, you are wrong. Sunday I am selling 1000 worth goods. Okay. That 1000 only blocked for 3 days, sir. You are telling 3000 is blocked. Wrong, sir. Same 1000 is blocked for 3 days. Listen. No avesam. Okay. If Kaushumukesh is saying me, there will be some meaning in that. So wait for a minute, you will understand. This 1000 will be received on Wednesday. Means on Monday I will not receive anything. On Tuesday also I will not receive anything. Why? Monday sale I will receive on Thursday. Tuesday sale I will receive on Friday. Correct? Answer. And I will receive on which day first payment? First payment is received on Wednesday. By that time 3000 rupees is blocked with me. Everybody understood the logic clearly now? Answer, everyone. Bad response here from the live students. Extremely bad. Everyone. I will repeat one more time. Have clarity. Okay. Again, I am erasing this lesson. See. Sunday's money, Monday, Tuesday, Wednesday I will receive. Monday's money, Tuesday, Wednesday, Thursday I will receive. Okay. Tuesday money, Wednesday, Thursday, Friday I will receive. Wednesday's money, Thursday, Friday, Saturday I will receive. Okay. Thursday's money, Friday, Saturday, Sunday I will receive money. Okay. Let us understand. Now you tell me. Sunday I sold 1,000. When I will receive this 1,000? I will receive 1,000 on Wednesday. Oh, sir, Monday also you will receive. No, you will not receive anything on Monday. Reason I will tell you. Monday sale you will receive on Thursday, not on Monday. So again there is a 1,000 block on Thursday. Okay. Next, Tuesday sale when you will receive? Friday you will receive. Okay, va? So Sunday's 1,000 you will receive on Wednesday. Monday's 1,000 you will receive on Thursday. Tuesday's 1,000 you will receive on Friday. Okay. Now Sunday's 1,000 when you are receiving? Monday. By that time already how much credit sale is made? 3,000 credit sale is made. In that 3,000, 1,000 is received in Wednesday. Again Wednesday sale is blocked. Again another 1,000 added. 3,000 blocked by Wednesday. In that first 1,000 is recovered on Wednesday. Wednesday sale again get added another 1,000. At any point of time 3,000 money will be blocked. That's the meaning of that 3,000. Understood the point or not? So Monday, Tuesday, Wednesday. Monday money will be received on Wednesday. But Wednesday's money which has to be received will be blocked again. So 1,000, 1,000, 1,000, 1,000, 1,000, 1,000. Sunday, Monday, Tuesday, 1,000, 1,000, 1,000. Wednesday, 1,000 rupees received, 1,000 rupees again blocked. Plus or minus happened, 3,000 will be blocked at any time. So that's how we need to understand this 3,000. Sir, everyone who is listening to the online, please tell me, did you understand this debtors management, this concept, this timeline concept in this way before? Honestly, you tell. First, we don't have clarity, sir. First chapter, if you don't have clarity, automatically when you do problems, you will face a lot of difficulty. You don't understand what he is trying to convey. So this is what they mean by debtors collection period. Understood? Without knowing this, we will do ratios chapter also. We should not do, actually, we should know what do you mean by collection cycle. This is what I mean by collection cycle. Hopefully everyone understood the point clearly, right? We'll begin. In other words, 3 days sale is with the customers throughout the year. Any 3 days will be blocked. Receivables manager. And one person will manage this receivables, make the following decisions. And in this chapter, we are the credit managers, receivables managers. We will do 4 kinds of problems. Credit period, how much to give. Credit appraisal. Appraisal means what? When a person is paying early, we should give some benefit to him. So that appraisal. That appraisal can be in one of the forms is a discount. One of the forms is a discount. How much a discount to give if we pay early? That is another question. Lastly, the collection policy. What policy? Collection policy. Okay. Let us do one question now. Okay. Let us do one question. First of all, everyone, shall we start with the question? Can we begin with the question now? Okay. See, I will tell you what we are going to do in the today's class. Please see here. We are going to do first question and second question today. Okay. Which and which question here? First question and second question today we will do. Third to ninth question we will do in the tomorrow's class and close this area. Okay, well, everyone. So let us begin. Sales 15 million per annum and 1 crore 50 lakhs. Cost of sales 75%. 80% is the variable cost, 20% is a fixed cost. Don't add both of them, 80, 20, 100. Overall, we are telling cost of sales is 75. Cost of sales 75. In the cost, 80% is filled with variable, 20 is fixed. That's what you wanted to tell. In this 75 like 80%, 20% illa. Cost of sale 100 rupees na, 100 like 80 variable cost to 20 fixed cost. Okay? That cost is 75% of the total value. Am I clear? That means if sales is 15 million, 75% is 15 into 75%. 11.25 is the cost. 25 is the cost. In that 11.25, 80% is under 9 is variable cost, remaining will be fixed cost. Bad debts. 1% of the sales, FAT, in the form of bad debt. What is a bad debt? Bad debt is a cost due to credit sale. Cost due to credit sale. So in credit sale analysis, you must consider bad debt because of that only the loss has come. Required return 12% means if the money is not blocked in debtors, I might have invested my money in any source at 12%. So this will be used to calculate what? Opportunity cost of loss of interest. Next, credit period 30 days. Okay, credit period 30 days. What is this? Except to increase to 60 days. Expect to increase to 60 days. Now we are going to do credit policy analysis. What analysis? Credit policy analysis. As of now, credit period is 30 days. Now I wanted to increase to 60 days. Okay, increase to 60, not increase by 30 is there. Another 30 I wanted to add, making it 60. Good or bad? Because of giving 30 days, my sale is 15 million. Because of giving extra 30 days, more customers will come forward to buy or not. That increase is 15%. But because of that, bad debts from 1% will go to 4%. Fixed cost will not change. Comment on the policy. Is that question? Okay. First 1 minute time. Read the question properly. I will give you one schedule. I will give you one what? Schedule. That schedule, if you prepare properly in mind, any question in debtors management, exam, any type of question may come. Same process, same table, same concept will be there. Just put the numbers in the table, you will get the answer. But before that, read the question properly. Completed reading the question? Everyone completed reading the question, understood what we need to do? Okay. So let us now move on into the solution. See, I told now I will show you the solution, I will explain, but I will not give any time for you to copy now. So we have to complete now. So 2 questions we have to complete as a target. So let's complete them. First, any kind of question given in exam on debtors, schedule is same. What schedule? Cost benefit schedule. What are the costs because of debtors? First one is the cost of bad debts. Second one is the cost due to recovery, collection cost. Third one, loss of interest. Three dangerous things that can happen because of debtors. See, let us see now. Previously, my sale is 15 million. 15 million means in that 15 million, credit sales percentage has he given or not given? He has not given anything. So assume that all the sales are credit sales. Okay. Second one is not credit sale, cost of sales. So they did not tell how much is credit, how much is the cash sale. Assume that everything is credit sale. In this 15 into 1% is the bad debt before 1%. How much? So 1 crore 50 lakhs is the sale previously. 1 crore 50 lakhs is the sale. In that 1% means how much? 1,50,000 is the bad debt. Number 1. That previously, earlier. We are comparing both the previous. And credit sales, I will lose interest on that. I will lose what out on that? Interest. How much is a credit period? 30 days I will be losing interest. So 1 crore 50 lakhs into 12% into 30 divided by 360, another 1,50,000 I am going to lose in the form of interest prior. Okay. Next, collection cost. Has he given any collection cost in the question? No, they did not give any collection cost. So now see here. See. One by one, let us do. After that only we will make any comment. Okay. Please listen carefully. You have to understand each and every part clearly. First schedule. Cost benefit analysis. First benefit. What is the benefit that will come because of going for debtor? Contribution will rise. Why? Sales will rise. So then sales increase you can write now? No. You cannot take sales increase because from sales you won't put increase in bad debts and opportunity cost. From contribution only we will incur all those costs. So we will calculate increase in contribution because we wanted to know how much variable component is increasing. Because see, I will give you an example. Increase in contribution means what? Sales increase, variable cost also increase. We might have learned already in leverages chapter. Rate of change in sales, rate of change in variable cost, both will be same. So net contribution difference we will see. Sir, how you got this? Working notes are there. That's why wait. Don't see this. Numbers don't see. See only this one. Exam lo question came. First what we have to do? Number 1, cost benefit analysis. Except amounts, remaining columns you have to fill. A, benefit. B, cost. How many costs? 2 costs. Increase in bad debts, opportunity cost of interest. In this recovery cost is not there na total. Net benefit A minus B. Now let us calculate the increase in contribution. Sir, before doing increase in contribution, I will first tell you how to calculate the cost. Okay. Take calculator. Previously, what is the bad debt here? Previously, what is the bad debt? 1%. Now it is increased to how much? 4%. See, 1 crore 50 lakhs into 1% comes to 1,50,000. Okay. 1 crore 50 lakhs into 4% comes to 6 lakh. Correct? So there is a increase to 4%. Increase to 4%. See here how we calculate it. See, 1 crore 50 lakh into 1%. Okay, 1.5 lakh is the bad debt. How much? 1.5 lakh. Next, now the new bad debt will be 4%. This 4% will be divided into two parts: existing sale plus increased sale due to higher credit period. 1 crore 50 lakhs into 4%, 6 lakh. Okay. Next, because of doing the credit sale increase from 30 to 60, there is a sales increase by 15. Na? So 1 crore 50 lakh into 15%, 22 lakh 50,000. On this also 4%, 90,000. So 6 lakh 90,000 is the total bad debt. Perfect. 6 lakh 90,000. Previously 1.5 lakhs, now 6.9 lakhs. There is a bad debt increase of 5.4 lakh. That is the first cost we have written here. Okay. So the first primary cost is the increase in the bad debts. Previously it used to be 1,50,000. Now it became 6,90,000. There is an increase in bad debts of 5,40,000. Next, opportunity cost on interest. Opportunity cost on interest. See, where is it? Okay. Now listen carefully. Whenever I say interest loss, you can do it the question in three ways. You can do the question in three ways: sales approach, cost approach, variable cost approach. Okay, variable cost approach. Sir, which one to follow in exam, sir? See, when the problem does not give any cost detail, value of debtors will be using sales approach. Means what? Cost of sales, variable how much, fixed how much, not given. Go by sales approach. Okay, means in the model A we will do. No, sir. They have given details only about variable cost. Only variable cost details they have given. In that case, variable cost. When problem gives both sales, variable cost, fixed cost, everything, then follow total cost. See here. In this question, if you observe, they have given cost. They have given variable cost. They have given fixed cost. They have given sales. Now you will tell which model we have to use. Sales approach, cost approach, variable cost approach. Everyone, you are not here. Yeah, some are answering, some are not answering. See, when problem does not give any cost, only sales given. Cost details they did not give. How much variable, how much fixed. Go by sales. If it gives details only about variable cost, go by variable cost approach. If it gives all the cost details, then go by total cost approach. Understood? In this question, which model we need to choose? In this particular question, we have to choose a total cost approach because they have given the details of sales, variable cost, and fixed cost. Okay, sir, if that be the case, why you have done everything, sir? I have done everything to make student to know that there are other two approaches also. Let us follow this. Cost approach. Whenever I say cost approach, cost of sales you will take. What you will take here? Cost of sales you will take. Okay. See, existing interest loss. Generally, interest loss means what you will take? Credit sales you will take. But credit sales will contain profit element also. So, it is not that correct to take profit element and calculate. Therefore, we will take only the cost element. We will take only what element here? Cost element. So, cost of sales 1 crore 50 lakh or 150 lakh into 75%, 112.5 into how many days? 30 divided by 360 into 12% loss, 1.125. Proposed interest loss is how much? Proposed interest loss, see, 150 increased by 15% means 172.5 into 70% comes to 129.38. Okay, so cost of sales, see, 75% it will be. Now what is the sales here? Now what is the sales? 150. Sales will increase by how much percent? 15%. So 150 plus 15%, 172.5. In this technically you can take as a percent, correct or not? So that percent you can take, that is one way. Or see, I have done the cost of sales calculation also. Separately you can do. See the screen. $150 into 15, 172.5, correct? Yeah. So now what we will do? Cost of sales. What is it? Cost of sales. Instead of doing 172.5 into 75%, it will come to 129.38. But this is not taken by ICA because of one reason. That reason is also right only. Reason is, see here, the problem is in that fixed cost also will be there. In that fixed cost also will be there. Fixed cost will not change with the volume, na? It will be same. So first write down fixed cost 20%. 172.5. Okay. 172.5. First take it. See. 150 lakhs. Okay. 150 lakhs. Previously 150 lakhs la cost is 75%, 112.5. 112.5 la 112.5. In that 112.5, how much is the variable cost component? 80%. Means how much? 90 lakhs. 90 lakhs. That 90 lakhs only will increase by 15%. 103.5. Okay, 103.5. Fixed cost will be how much? Balance 20%. So the cost of sales became 126. Okay, see. You will get doubt. That's why I'm repeating multiple times. Let's start from the beginning. Roughly I will do. Sales 150, 172.5. In this 150, it existing, it proposed. Previously in this 150, cost of sales to profit breakup. 150 into 75%, 112.5, 37.5. Same we have to break down also here or not? 129.375. Actually here I have to come, but no. See, profit. In this variable cost, fixed cost. Variable cost is given in the question 80%. Okay. Now what will happen? 112.5 into 80%, 90 lakh. Okay, 90 lakh minus 112.5. 90 minus 112.5. 22.5 lakh is the fixed cost. In this cost of sale also variable cost, fixed cost will be there. But not in the same 80-20 proportion. Fixed cost, here it is 22.5, correct? Here also it will be 22.5 only. Fixed cost won't change, na? 22.50. 22.50. Okay. Now listen carefully. Now listen carefully. 172.5. 172.5. Fixed cost we have taken. How much? 22.5. You observe here 22.5. So previously, what is the variable cost? 90. Now increased by how much percent? 15. 103.50. Now 172.5, in that 103.5 plus 22.5 means 126 is the total cost of sales. So in 126 divided by 172.5, it comes to somewhere around 73.04% something. So cost of sales percentage will change. So this is the scenario in the given question. Whenever you take cost of sales, you should take this value now. Okay. See, first cost approach. Existing, this is the interest loss. Okay. Now, this is the interest loss. What is the increase in interest loss? 1.395. Ante 1,39,500. So bad debt increase adjustment completed. Opportunity cost adjustment completed. Total cost increase is how much? 6,79,500. Anyway, recovery cost is not given. Let us see the increase in contribution. Increase in contribution. Previously, 112.5 is the cost. Variable cost 90, fixed cost 22.5. Sales equal to what? Cost sales minus variable cost. Contribution. Okay, 150, 60 is the contribution. Total sales 150 minus variable cost 90, 60 is the contribution, 40%. Now what is the sales? Instead of 150, it will become 172.5 minus variable cost 103.5. It becomes how much? 69. 69. So what is the increase in contribution? 60 became 69. 9 lakhs increase is there. So 9 lakhs increase is there. In the income, 6,79,000 increase in the cost is also there. So I am having a net benefit and net cost, net benefit. Since there is a net benefit, accept the project. Accept the project means go with new credit policy of extending the credit period to 60 days. So therefore, see here now. Sir, I will not do as per cost approach, sir. If the question does not contain any cost detail, only sales given. Now I have to go by sales. Now, what to do? Dead easy. Nothing to do. Directly take sales, directly calculate over. It's easy. No, sir. Variable cost only given, sir. Then see, variable cost of sales. Variable cost of sales means what? This only we will take. Not even 126. We will take only this part. Okay. See, variable cost of sales, variable cost of sales, variable cost of sales. Same 90. This is the answer. Okay. So when the problem does not give any cost detail, sales. When problem gives details only of variable cost, variable cost. When problem gives the details of sales, variable cost, fixed cost, then use the total cost approach. Everybody in live reply. Did you understand the full problem clearly or not? Everybody. I am putting it before you. Take a minute time, analyze the question and answer as well. 3 minutes time I will give. Hello. Okay. So everyone understood the first point clearly? Next question. Question number 2. Particulars, present policy, option 1, option 2. Particulars, annual credit sales. Credit sales are given 225, 275, 350, and all are in lakhs. Accounts receivable turnover ratio, debtors turnover ratio, debtors turnover ratio 5, 4, 3. Debtor bad debt losses 7.5, 22.5 lakhs, 47.5 lakhs. Expected return, normally return if you give 20%, variable cost is 60% of sales price. In this question, variable cost details only given, total cost not given, fixed cost not given. Correct? Then what to do? Which approach we need to follow? Everyone. So in this question, expected return given, variable cost is given. Variable cost is given as 60% on sale price. Here only variable cost percentage is given. Okay, fixed cost not given, total cost not given. So which approach we need to follow? That's it. So we need to take variable cost approach. Sir, before going into any approach, first see, credit sales is given. Present policy 225. Accounts receivable 5 times. Accounts receivable turnover ratio. Sir, debtors turnover ratio means sales by debtors. Sales by debtors. Credit sales, whatever you call that, by debtors. See here. Debtors turnover ratio, sales by debtor. Debtors turnover ratio of say 12 times means debtors are rotated 12 times. Debtors are rotated 12 times. What do you mean debtors are rotated 12 times? In a year, we will get rotation from the debtor 12 times. Okay. So, see here. Hence, debtors equal to sales divided by debtors turnover ratio. Sales divided by debtors turnover ratio. If the DTR increases, debtors decreases and vice versa. Means, I will receive in every 2 days means amount blocked will be reduced. I will receive money once in every 10 days means amount blocked will increase. So debtors will increase if the debtors turnover ratio, if the debtors turnover ratio is reduced. Debtors turnover ratio reduced, debtors will increase. Debtors turnover ratio increase, debtors will reduce. So if DTR increases, debtors decreases and vice versa. But anyway, we don't require all these things now. Just to come to the point. Debtor turnover ratio, all turnover ratios, turnover will be in numerator here. So sales divided by turnover divided by debtors. First, let us do the cost benefit analysis for option 1 and option 2. Okay, let us see. Increase in contribution. Increase in contribution, working note. Contribution, increase in contribution, sales minus variable cost. Already he has given clearly in the question that variable cost is 60%. So PVR will be, PVR means PV ratio 40%. Existing contribution 225 lakhs into 40%, 90. Next 275 into 40, next 350 into 40. Next. Increase in interest loss. From here the cost will begin. Okay. Increase in interest loss. In this question, if you observe, bad debts is given 7.5, 22.5, 47.5. So since the number is already given, you need not make any calculation. That's why directly we have taken. Okay. Directly we have taken. Let us see. So increase in contribution. Previously, what is the contribution? 40%. 40% is applicable in all cases. Previously 225 lakhs with the 40. Now 275 40, 350 la 40. Okay. Now next, increase in the interest lost. Increase in the interest lost. 225 lakhs. On that 20% I will lose. Okay. 20% I will lose. Divided by 5. Debtors turnover. Okay. Debtors turnover ratio is how much? 5. See here, yeah. Debtors equal to, debtor turnover ratio equal to sales by debtors. And debtors equal to sales by debtor turnover. 225 sale. Debtor turnover ratio 5. 9 we got. 9 into 20. This into 20%. So 225 into, sorry, 225 divided by 5 into 20%. 9 lakhs is the interest loss in the first case. Next scale 13.75. Next scale 23.33. See now. Increase in contribution. Option 1. Previously 225 became 275. 15 contribution increased 40%. 225 into 40%, 90. 275 into 40%, 110. 90 became 110 means a 20 increase is there. 20 increase is there. So here how much increase is there? 50 increase is there in this case. Increase in bad debt. 7.5 became 22.5. 15 increase. 22.5 became 47.5. But if you compare with this, 47.5 minus 7.5, 40 increase is there. Interest loss also be increase. So net benefit here 0.25. Net benefit here is minus 4.33. Final answer. Select option 1 because it has highest positive net benefit. So rather than going by present policy, go by option 1 because option 2, though it is giving high sales, it is also giving high bad debts and receivables ratio is only 3. Debtors turnover ratio is only 3. Means in a year, we will receive money from the total rotation only for 3 times. Everyone answer question 1 and question 2 calculations understood clearly? Everyone? Okay. So we will stop the class here for today because I am having another connected final class now. So once after that, tomorrow's session, we will again have on this and we will cover and complete the debtors management chapter such that you will be you will be having full confidence. Thereafter, we will start with other miscellaneous areas in FM for the revision. Everybody, are you all confident up to here? Yeah. Okay then. Thank you very much. We'll meet again in the next class. So let us continue with debtors management. With regard to question number 1 and 2 were completed in the last class. Now we are going to begin with question number 3. Okay, question number 3. So we are going to start with question number 3. I will show the facts first. Copy down all the facts of the particular case. Try to understand and interpret them. We'll start doing the question directly. See the question there. Question number 3. Current sales 2 crore 56 lakh 48,750. Proposed credit terms. Proposal we did not give. We are proposing to give a credit term 60 days. What is the present term? 45. So we wanted to increase this 45 to 60, which means we wanted to enhance our credit policy. Because of this, there are 3 disadvantages. Disadvantage number 1, there will be increase in bad debts. Second one, there will be increase in the recovery cost. Third, very important thing is there is a loss of interest. Okay, opportunity cost of interest. So 3 things will grow whenever you increase your credit term. Next, increase in bad debts. I told you first impact increase. How much increase? 1.5 present becomes 2% because of this enhanced credit policy. Next, increase in sales. But there is an advantage also. Sales increase will be 10%. Variable operating cost, 72% of the sales. Means in this sale, 72% is the variable cost. 72% is what cost? Variable cost. Means the balance 28% are other costs that are involved in the cost. Taxation 35%. Return on investment after tax 15%. Why this return on investment? This is the loss of interest. Okay, that means if the company have any idle funds with them, they will invest at 15%. Now your idle funds are not investable, they are in the hands of your debtors, therefore you are losing this 15%. That loss also should be considered. So comment on the new credit policy. So this is what we need to understand. In this question, what is the new thing that we learned? See the questions on the screen. I am scrolling up. Here observe the data. Sales, cost of sales, bad debts, required return, credit period, sales increase, bad debt, no change in fixed cost. Type 1 question. Every question, I have around 10 questions in this chapter. Every question will give you one new thought process, new understanding. Okay. But all questions are not difficult. New concept that you can also do. But still, I will explain a couple of problems first. Next. Second question. We have given two options and asked which is better in compared to the present one. Third question. Tax is involved. Whenever this tax part is involved, how to deal with the question is a subject matter of discussion that we are going to do now. Okay, when taxation is involved, how to deal is a query. So whenever we do that, how to approach towards the problem, I will tell you. Before that, read the question, write the question. I will give time. First, write down the facts of the question. So see here. So if you haven't noted the question, if you are listening normally, pause the lecture and go back, or else please note it down fast. See here. Let me explain how to tackle these kind of tax involved questions. Okay, how to do the tax involved questions. See, very easy. Romba simple concept. The only logic that we need to understand is, anyway, there is a standard format for us. Benefit cost. Increase in contribution is the benefit. Increase in bad debts, increase in recovery cost, increase in interest loss will be the cost. Compare benefit and cost. If cost is more than benefit, don't adopt the credit policy. If cost is lesser than benefit, or there is a net benefit out of this credit policy, accept the credit policy and apply that. This is a normal logic that we have already understood. In this question also, same thing, everything is same. The only difference that you are finding in this question is there is a tax involved. Whenever tax is involved, 3 places la adjustment is required. How many places here? 3 places la adjustment is required. Actually 4. In this question, 3 places. Okay. First question, place 1. When you take contribution, contribution gives you EBIT. EBIT belongs to 3 people. Number 1, debt. Number 2, government tax. Number 3, shareholders. That equity can be, or can be preference also. So what you have to understand, contribution also doesn't belong to one person. It belongs to 3 people. Debt holders, government, equity. Remove the government part out of it. Then it will be remaining out, or the remainder value will be the thing which is belonging to our company. Okay, debt to equity, I'm not going to bifurcate now. I'm going to tell company involved persons, outsider like a government. In that case, obvious answer is contribution amount la government will be taking out tax part and balance will be enjoyed by the persons inside the company. Interest portion will be taken by the debentures or debt holders and the profits will be taken by the equity holders. As simple as that. Everyone in the live, please answer, or you all understand the concept clearly or not up to here. Okay. So from this, the first thing that we have to understand is whenever tax is involved, contribution should be contribution after tax. Adjustment number one. Adjustment number two. Bad debts is a allowable deduction under section 36 of Income Tax Act. Okay. Under income tax law, bad debt is a deductible expenditure. Simply to tell, it's a business loss which can be charged to the P&L debit side. Bad debt is allowed under Income Tax Act, provided some conditions are satisfied under section 36 subsection number 1 clause number 8. There is a provision which talks about bad debts, when bad debts are allowed as a deduction. Of course, if the bad debts which are charged to P&L are recovered at a later assessment years, then in the assessment year in which it was realized, it will be charged to tax under section 41 subsection number 1 clause number C, which will be talking about the deemed income of the PGBP that year. So let us go normally how bad debts are treated in the books of accounts from the taxation point of view. Bad debt is a deductible expenditure. P&L account like debit side we will put. Because of putting on the P&L debit side, profit will come down. When profits are coming down, income tax will come down. So naturally what we have to understand, bad debt leads to income tax saving or tax saving. Therefore, whenever you are considering bad debts in the cost part in this table, we should consider bad debts after taxation. After taxation means after giving the tax saving impact, we have to calculate bad debts. Same we have to do also with interest loss. Okay, but in this question we need not do because the 15% given in the question is already given after taxing. Again, you need not do any adjustment. In the question, if they don't tell anything, just they said return expected by company 15, then must and should you should assume that it is before tax and you need to give the tax impact as well. Understood the point clearly? Yeah? What we have to do explained here. Now next step is we will do. What we have to do completed. Next step execution. Understood? Okay. So let us now begin with the discussion part of next area. I mean the answer part. See, everyone take calculator. Okay, everyone take what? Calculator. Numbers are there on the screen. 2 crore 56 48,750. I will do one thing. I will take the facts. Okay. Now, so sales are how much here? Sales 2 crore 56 lakh 48,750. 2 crore 56 lakh 48,750. Proposed credit terms 60 days. Present credit term 45 days. Increase in bad debt 1.5% to 2% of sales. Increase in sales 10%. Variable operating cost 72%. And taxation 35, return on investment after tax is 15%, and comment on the new credit policy. Listen, what is our schedule? First, to know how to present the answer. Step 1, write down. Step 1. Credit policy statement. Credit policy statement. A. Benefits. Increase in contribution after tax. B. costs, increase in bad debts after tax, increase in recovery costs after tax, increase in interest loss after tax. C. Net benefit. A minus B. Net benefit A minus B. Everyone, did you all put this in your mind? The schedule. Everyone, did you all put this in mind? The schedule. Okay. So credit policy statement, first we prepared it. Benefits, cost, net benefit. Now, don't do anything. I will do it and I will give time for you to note. First, listen carefully what we have to do. First thing, we wanted to know contribution increase. Okay, working note 1. Contribution. Listen first. No avisam. Listen. 2 crore 56 lakh 48,750. Present. 2 crores 56 lakh 48,750. Okay. Sales increase by 10% means contribution will increase by 12%. Sales and contribution are directly related. Sales increase by 1% means contribution also will increase by 1%. Sales increase by 10% means contribution also will increase by 10%. So there will not be a different proportion of increase in sales and contribution, because between sales and contribution there is another item called as a variable cost. All the three are variable. All the three are variable. Sales is a variable thing. Variable cost is a variable thing. Contribution obviously is a result of sales minus variable cost. That is also variable. All variables will change at the same rate. All variables changes at the same rate. That's why in costing, what they will make you learn in costing, fixed cost, overall amount will be same. Per unit will change. Variable cost, overall amount will change, but per unit will be same. Did you understand what I said or not? Fixed cost, overall everything is same. 1 crore, fixed cost won't change. But per unit fixed cost will change. That's why we don't do any per unit cost for fixed amounts. Fixed cost per unit will change. Fixed cost overall will not change. Okay. Variable cost overall will change. Per unit will be same always. Understood? This rule is more useful when you are doing semi-variable cost. Which cost here? Semi-variable. It's not completely variable, it's not completely fixed. Semi-variable time, there will be a small change, which you will do in overheads chapter, in costing paper. Okay, not only in overheads, standard costing also will do, semi-variable distribution. Okay, so anyway, I am not here to teach you costing, I am here to teach you financial management. Let us focus on that properly. So the point is, current sales 2 crore 56 lakh 48,750. In this, variable cost is 72%. Okay, variable cost are 72%. Sales 72% variable cost means how much is the contribution? 28%. So present contribution is 2 crore 56 lakh 48,750 into 28%. 71 lakh 81,650. This is before tax. Remove the tax part in that. So I will consider after tax 1 minus 0.35. Okay, 35% tax is given 1 minus 0.35. So 71, 81, 650 into 0.65. So now present contribution after tax is 46,68,073. Okay, next contribution proposed. This 46,68,073 will increase by 10%. So 46,68,073 plus 10%. 51,33,780. So what is the increase? 46,68,073. Okay. Increase, you tell the number here. Increase, you calculate and tell. Tell the number. You can do increase in this way also. So if you don't want to do this way, I will show you another way also. Contribution increase. See, like this also you can do. 256 48 750 into 110%. Okay, into how much percent here? 110% into 28% into 0.65. Like this also you can do. So 256 48 750 is the old sales. Increase by 10%. Okay, into 28% is the contribution, into 0.65 is the net amount. 51 34 880. Okay, 51 34 880 minus 46 68 073 466807. Have you all got the same answer? 466807. Everyone got the answer? 466807. That way you can do, this way also you can do. Both are right. Directly you can do for contribution also. Directly you can do for contribution, but to make you more clear, first of all, everyone participating in live, at least you should react, understood up to here clearly. Done. Working note 2. Working note or 2. Increase in bad debts. Increase in bad debts. See, how much is the bad debt previously? Sales, assume that everything is credit sales. In that 1.5% is the bad debt. Now it will go to 2%. Okay. See, existing, proposed 25648,750. Okay, 25648,750 is the sales. In this sales, let us assume that everything is a credit sale. In this sale, 1.5% is the bad debt, giving you a tax saving of 35%. So take only the net benefit, the net cost. So 25648,750 into 1.5% into 0.65. 250075. 25075. Everyone please reply. I will be seeing your comments here. Reply. Everyone got the answer up to here? 250075. Have you got the answer? Okay. Next, proposal. Proposal, what will happen? 25648,750 into 110%. 10% increase in sales. On that, there will be a 2% cost with a tax saving of 35. So the net cost. Calculate. 25648,750 into 110% into 2% into 0.65. It is 366,777. Okay, so the net cost minus 250075, it is 116702. 116702. Everyone, have you got the same answer? 116702. What is this 116702? This is the net cost due to bad debts. Okay, net increase in the bad debts. Okay. So this is the benefit that we are getting. This is the cost one. Working note 3, recovery cost 0, nothing is there. Working note 4, interest loss. Interest loss. See, 2 crore 56 lakh 48,750. 2 crore 56 lakh 48,750. In this 2 crore 56 lakh 48,750, if you observe clearly, see the query. Okay, increase in sales 10%. Return on investment, what is the return on investment? 15%. Okay, increase in bad debts we considered. Proposed credit terms, you see, 60 days we wanted to make it. From the existing, how many days? Existing it is only 45 days. Now I wanted to increase it to 65 days. Listen carefully to the point first. See, variable cost is how much? 72% of the sales. How much percent here? 72% of the sales. Means what is the balance amount in that? Contribution will be the balance. Correct? 28%. See, let us discuss about interest cost in detail. Before that, you do one thing. Copy the answer up to there. Okay. First, working note 1. I think you already copied this now. Do one thing. If you don't copy, at least see the answer. You can write it later also. You can save time. First, see the answer. Whether what we have done is actually there in the final answer or not. How to present the answer in exam also I have given there. First of all, everyone confirm me. Did you understand up to here clearly? Once you understood up to here, next step we will go. We will understand that also, such that all the questions will be answered. Are you thorough up to here? If you say one yes, I will continue. Okay, done. Listen, the most important adjustment. Why most important adjustment? See, I can take like this. See here. Increase in sales 70%. Variable operating cost 72%. Tax 35. Return on investment is 35%. 15% after all the taxes. So now what doubt will come? Sir, how to calculate interest loss? Direct. Sales you take 2 crore 56 lakh 48,750 into 15% already given after tax into 45 divided by 360. That is the interest loss now. Wrong. Why it is wrong is, that's why I gave gap. First you will continue with first two steps. After that fresh step will start. Why this is wrong is I will give you an answer. The other class I already discussed very clearly in detail. There are three kinds of approaches: sales approach, cost approach, variable cost approach. Okay. So sales approach, nothing is given sales approach. But if variable cost only is given, then we need to approach the variable cost model, wherein we will consider all at a variable cost. All at what cost? A variable cost. So listen carefully. That's why here when you consider 256, 750, you should consider only 72% value. Okay, what value? 72% value, because we are going through variable cost approach into 15% into 45 divided by 360. 256, 48, 750 into 72% into 15% into 45 divided by 360 into 45 divided by 360. So how much you need to get? Tell the value. 346,258. 346,258. But one of our friend has said I copied that number. I have no answers with me. So you should only confirm 346,258. Someone said I wrote there. Correct? Then okay. Very good. Next. Now what will happen? 256,48, 750 will grow by 110% or 10% increase will be there. Okay. Into 72% into 15% into 60 by 360. Do the calculation. 256.48 750 into 110% into 72% into 15% into 60 divided by 360. I got 507,845. 507,845. So what is the increase in the interest loss? 507,845 minus 346,258. 161,587. 161,587. Okay, this is the interest loss. Now take all the costs. Take all the costs. Increase in bad debt. 116,702. This is no. Next one, 161,587. Okay. What is the total cost? 116,702 plus 161,587. 278,289. 278,289. Next, what is the increase in contribution? 466,807. 188,518. 188,518. 188,518. Everyone got the answer? 188,518. That's it. Since the net benefit is positive, the new credit policy is acceptable. Okay. Shall we see the answer now? See here. Bad debts over. It is important adjustment. It is recommended to go with the policy. Wow, how much you got? How much we got here? 188,518. Exact answer. 188,518. 188,518. Exact answer. Match. One decimal also there is no change, or one units place also there is no change. Exact answer 188,518. Everybody answer. Did you all understand the question and answer clearly or not? Okay. But presentation should be like this. It's not about doing the answer. How beautifully you are presenting. Clearly I have written here. What is this? Variable cost approach. See, when we have tax, contribution we derive is subjected to tax. Entire amount does not belong to company. Likewise, when we have bad debts, we will charge bad debts to P&L account, and thereby bad debts is going to give a tax shield. In the same way, cost of interest cost should be after tax. However, if the rate of interest given in the question is already after tax, no tax adjustment is needed. With that, I started cost benefit analysis, variable cost approach. How do I know variable cost approach? I told you in the last class very clearly how to identify. When the problem doesn't give any cost detail, sales approach. Okay. When the problem gives the details regarding variable cost only, fixed variable cost approach. When they give costs clearly, sales, variable cost, etc., total cost approach we need to take. What approach? Yeah? Total cost approach we need to take. Clear? So total cost approach means what? Both fixed costs as well as variable costs you need to consider there. That is a different thing. So question number 3 also completed. Next. I will put the answer before you for 2 minutes. Analyze the entire answer. Once you say perfectly okay for that, we'll be going into the next one. Okay. Are you all comfortable? Someone is asking working note 3. Everyone, are you all comfortable? Understood the working? Sir, here the point is not about understanding answer. Working, entire working, you should have a clarity. Then only in examination, chances of not committing the mistakes will be very, 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 very less. Are you clear up to here, everyone? Okay, done. Next issue. Next issue. See, so the next concept we are going to discuss is discount policy questions. Very, very famous and fancy question. Discount policy question. Which policy? Discount policy question. See, discounts are of two types: trade discount, cash discount. Sir, like in a regular session, I will not spend hours together on this. I will quickly explain from the exam point of view what is required. Questions will not be on trade discount, questions will be on cash discount. What is the difference between trade discount and cash discount? Trade discount is a discount incidental to the trade. Cash discount is a discount incidental to the credit policy. There is a lot of difference. We are going to discuss about cash discount, not trade discount. Sir, I didn't understand. Sir, I will give an example. I said, I will buy one pen. Okay. Person will sell me at a retail price. He said 10 rupees. I said, I will buy 10 pens. He said, I will reduce 1 rupee on each pen. I said, I will buy 1000 pens from you. He will quote me a retail price, 5 rupees he quoted. Understood? From this, what is the difference you understand? When the bulk of purchase is being made, the other party selling also gets a motivation to give some discount to you. Incidental at the time of trade itself. That's called as a trade discount. That's called as what discount? Trade discount. Number one. Number two, because of this, there is, other than trade discount, there is another concept called as a cash discount. Cash discount is not for bulk purchases. Cash discount will be given to motivate the credit terms or to make the payment earlier than the existing credit term. See, I will sell the goods on credit for 60 days. For how much? 60 days. What I will tell? I will tell this way. If you pay within 10 days, I will give 3% discount. Okay, I will give 3% discount. For example, I purchased worth 1 crore worth goods. How much? 1 crore. 1 crore worth goods. I can pay after 60 days. I can pay after 60 days. But the person who sold me, the supplier, gave me a credit. He said, if you pay in 10 days, I will give you 3% discount. Then I understood 3 lakh rupees discount will come. Then I will come and I will pay early. Because of giving a cash discount, there is advantage, there is a disadvantage also. First, advantage number one. Advantage number one is reduction in bad debts. Obviously, those who are coming forward and paying entire money, potentially they are not subjected to bad debts. So percentage of bad debts will dramatically fall because of a discount policy, cash discount policy. Second very important thing, interest loss will be reduced because normally my money in the debtors has to block for 60 days. Now he's coming in paying within 10 days itself. 50 days, there is a benefit of interest. Correct? Loss of interest is reduced or benefit of interest will come. Loss of interest is reduced to 10 days or otherwise around a benefit of interest will go up to 50 days. Number two. Number three, recovery costs also will fall. Why recovery costs will fall? Normally I need to put a person, that person has to follow up, then only you will pay for them travel expenses, fuel, food, all these expenses you have to pay, salaries, I only have to pay. Because of that, number of staff recruited will be low. These are all the benefits that we get if you go for a cash discount policy. You go for what policy? Cash discount policy. Okay. Now, second thing. So, sir, all are advantages say. There is no disadvantage. Na? Disadvantage of cash discount is discount itself. Why? You are getting lesser amount, na? You are giving 3% or 4% or 2% discount means what is happening here? Automatically the amount what you netly realize will be reduced now. So the disadvantage of discount policy is a discount. The advantages are these three. Now we are going to compare the benefits of discount with the cost of discount, and we have to take a decision. That's what the subject matter of discussion we are going to make. Are you all understand the concept clearly or not? Everyone? Okay, done. See here. Or else I will do one thing. I will fully explain the balance also. Then we will see the main notes. See here. Cash discount terms. They will tell us 2 by 10 net 40, 4 by 15 net 60. Like this they will give. Sir, how to interpret this 2 by 10 net 90 net 40? 2 by 10 net 40 means normally the credit term is 40 days. Normally the credit term given is 40 days. But if you pay within 2 days, sir, very sorry. If you pay within 10 days, 2% discount will be given. Okay. How much? 2% discount will be given. I repeat, how to understand? Normally credit period is 40 days. But if any person come forward voluntarily and pay in 10 days, I will give a 2% discount. How to interpret the second one? Normally credit term is 60 days. But if any debtor voluntarily come forward and pay within 15 days, I will give him a 4% discount. Understood? So this is the point here. Now what we have to understand, see, 2 by 10 net 40 means 2% discount if paid in 10 days. 4 by 15 means 4% discount if paid in 15 days. That 40/60 is the maximum credit period that they give. Understood? For this, there is a formula to calculate. Rumba simple formula, a basic 4th class, 5th class formula is there. That I will discuss later. But understood the concept clearly, yeah. All what I have to discuss already over here. Understood? Just one small formula is there. That formula we have to understand. With that, we will start doing the questions and answers. Up to here, understood clearly? Okay. See here. I will show you the notes. Read this. Take 2 minutes time. Slowly read. You will understand. Have you read the first page, everyone? First page completed, everyone? Have you understood up to here, everyone? Have you read? If you complete the concept, let me know. We will go into the next page. Okay? Yeah. See here. I will explain one concept. After that, you can copy the formula. See, some will tell this way. Some will tell this way. What they say is, see here. What they say is, compare interest benefit with that of discount. With that of discount. What do you mean by compare interest rate with that of discount? Discount, whenever you give, you will give a percentage of discount. Correct? You will give a percentage of discount. That discount percent is a cost to the company. Compare it with the interest cost in percentage terms. So discount percentage, you compare with the interest percentage. Discount percentage, you compare with the interest percentage. If discount percent is more, you take a decision accordingly. If interest percent is more, you take a decision accordingly. How to take it accordingly? A discussion, we will do that in the problem directly. But let me give you one formula. But listen carefully. Interest percentage, discount percentage cannot be compared directly because interest is always annualized. Means what? We will tell in per annum terms. But discount is never expressed in per annum. Discount is always expressed in percentage for that sale period. So therefore, we need to convert that into annualized. So here, conversion is required. Here not required because already it is converted amount. See, how to convert, let me explain. Cash discount divided by 100 minus cash discount. 100 minus cash discount. Next, into total period 360 divided by CPB minus CPA. Credit period before, credit period after. Total into 100. Okay. See, let me explain the meaning clearly. After that, you can write the notes. See here. Cash discount 2 by 10, 2 by 10, 2 by 10. Okay. We have already said in a 2 by 10 question. Let us go by that. 2 by 10 net 40. How to understand this? Normally, credit period is 40 days. But if you pay within 10 days, I will give a discount of 2%. Other meaning. So cash discount 2 rupees. Because of that, in every 100, you will receive only 98 rupee. Okay? Sorry. You will receive only 2 rupee. You will receive only 98 rupee because in the name of discount, you will leave 98 2 rupees. You will get only 98. So cash discount on 98 into 360 divided by, normally the period is 40 days. Now it is reduced to 10 days. So you are getting a benefit of how many days here? 30 days benefit you are going to receive into 100. 2 by 98 into 360 by 30 into 100. So what does it mean? 2 divided by 98 into 360 into 100 divided by 30. 24.49%. 24.49%. This you compare with the interest rate. Okay. So how to compare, how to understand it, all these we will see in a problem. Axel, first did you understand how to interpret this in the form of a number, sir? Okay. So you are giving a cash discount of 2 rupee. Because of that, in every 100, you will receive only 98. You will receive only 98. So 2 divided by 98, how much? 0.02, 0.02, 05, 04, 0.0204. Okay. Or 2.04. How much? 2.04% is the cost of discount. 2.04% is the cost of discount. Okay. This is for how many days? This is for 30 days. This is for how much? 30 days. So I wanted to know how much is for 360. What you will do? 2.04 into 360 divided by 30. So 2.04 into 360 divided by 30. Exactly you got 24.48%. In 2.04, 360 by 30A, 360 divided by 40 minus 10 into 100. Did you all understand how to do alternatively? Everyone in the class answer. So tell the formula once for all. Cash discount divided by 100 minus cash discount into 360 divided by CPB minus CPA into 100. 4 by 15 net 60. How to do? Tell the answer for this. 4 by 15 net 60. You tell the answer. 4 rupees. 100 minus 4 rupee into 360 divided by, okay, 60 minus 60. Here we have done 40 minus 10. Here 60 minus 15. 30 days there is a saving. Na? How much is the answer? 33.33%. Everyone got the same answer? Everyone got the same answer? 33.33%. Okay. Now let us start doing a examination question. All our exam questions say whatever question we are doing here came in exam already. So that's why read these notes properly before we start with the question. Everyone answer? Understood? Can we move to the questions now? Can you start doing the credit policy questions? Okay, done. Let us begin. Don't do with me. First, I will do it and I will give time for you to see the answer clearly. Analysis, I will give enough time. Okay, see the question first. Standard credit term 60 days net means 60 days time they will give. Net means the maximum cost of capital. Okay, cost of capital 16% per annum. Proposal to give 2.5% cash discount if they pay within 7 days under the three cases. If original credit term is 60, original credit term is 80, original credit term is 105. Original credit term is 105. So I have, in all the three cases, I have to pay within how many days? 7 days. So how to understand 7, see, 7 days, 2.5, 2.5 by 7 net 60, 2.5 by 7 net 80, 2.5 by 7 net 105. This is how the working has to be done. Are you understanding what I said or not? Everyone, did you understand what I said now? Reply first. Now what I said, did you understand? 2.5 by 7. So how to understand the first one? First policy is 2.5. Okay, 2.5 by 7 net 60, 2.5 by 7 net 80, 2.5 by 7 net 105, net 105. See here, 2.5 by 7 net 60, 2.5 by 7 net 80, 2.5 by 7 net 105. Discount percentage per annum, let us do. I will do it. Listen carefully first. What is the formula? Cash discount by 100 minus cash discount into before minus after into 100. Cash discount. How much cash discount? 2.5. 100 minus 2.5. 100 minus 2.5 into, first of all, everyone understood clearly, 100 minus 2.5 into 360 divided by credit period before 60, credit period after 7, credit period after 7 into 100. 2.5 divided by 97.5 into 360 divided by 53 into 100. I got an answer as 17.416. See, I got the answer this way. 17.4165 something. I took it as 17.42% per annum. Don't do any analysis now, just answer. Okay, one solution over. Next solution, discount percentage per annum equal to 2.5 divided by 2.5 divided by 100 minus 2.5 into 360 divided by how many days given here? 80. Okay, 2.5 divided by 97.5 into 360 divided by 73 into 100, 12.64% per annum. I got the answer. Next, 2.5 by 7 net 90. Discount percentage per annum equal to 2.5 divided by 100 minus 2.5 into 360 divided by 105 by 7 into 100. 2.5 by 97.5 into 360 divided by 98 into 100. I got 9.419, 9.42% per annum. 9.42% per annum. Up to here, everyone understood the working clearly? Yeah, reply. Reply everyone, did you understand this answer clearly up to here? Okay. Now, finally, let us make a comparison. Let us make what? A comparison. See, what is the cost of capital? 16%. Understand with common sense. 16% I will write here. 16% is the cost of capital, also called as interest loss, which is reduced now. Okay. Or on that particular amount, that much interest you will get now. Okay, this is a benefit. Discount is a cost. Situation 1, 17.42%, 12.64%, 9.42%. See here. What is the cost of my discount? 17.42. What is the benefit of interest inflow? 16. Discount cost is more than the interest benefit. Therefore, this discount policy is not entertainable. Discount cost is 12.64. Interest benefit is 16. Go with interest, not by discount. Sorry. Go with the discount policy, no problem. Your cost is 12.64, benefit you are getting is 16. So cost is lesser than benefit, net benefit you are having, go with it. Third also same. That's why you see the answer. First one, 17.42. The cash discount paid to get the money earlier is 17.42% per annum. But the interest saved is only 16%. Hence, do not give cash discount for that term. Next one, benefit is 12.64, we recommend. Benefit is 16 and cost is 9.42, we recommend. Everybody understood how to answer the query or not? See the answer now. 3 minutes time I will give, analyze it, complete it fast. Okay. Everyone, have you understood? Can you move on to the next one? Okay. Now let us go into the next question. 8 marks question came already in examination. This question is based on discount policy. Please copy down the question first. So let us continue. Let us understand how to do this question. See, they have given us annual sales. How much? 60 crore. Existing credit policy 1 by 15 net 40. Normally credit period is 40 days, but if you pay within 15 days, 1% discount will be given. So the cost of discount is 1%. General percent of customers availing the cash discount is 60%. Slight change in the question. So entire sales discount will not be availed. In that 60 crore, 60% value only will avail a discount. Means remaining people don't even avail the discount. Okay. Next, average collection period 45 days. Default rate 0.5% and a bad debts rate. Next, proposed alternatives. There are two alternatives proposed. Credit term 2 by 10 net 35. In that 80% will avail. 80% avail means what you understand? 80% of the customers will pay within 10 days only. Okay. Okay. Now, next, average collection period will be reduced to 20. Sir, what do you mean by this average collection period again? Listen, normally I gave 35 days. I gave 35 days. How many days? 35. Now the question, 35 days is what? Maximum credit term I gave. That does not mean everyone will pay on 35th day. Some will pay in 10 days, some will pay in 1 day, some will pay in 4 days, some will pay in 29 days, some may pay last on 30th day. Average collection period is 20 days. Same in the second case. 25 is the maximum given. Average 14 days they will pay. So default percentage increase it to 1 in the first case, increase it to 1.5 in the second case. Increase to 1.5 in what's the second case. This is the question that was given. Sales are expected to remain stable and required rate is 18%. What strategy company should follow? 8 marks question given in exam. Okay. First of all, everyone, have you written the question, read the question first, understood what they are asking from you? Everyone? Okay. To save your time, I will directly show you the answer and explain directly. Okay. So that we can save time and we can also move on into the next area. See here. See here. See here. Annual sales 60 crore. Existing credit policy 1 by 15 net 40. General percentage 60%. Average collection 45. Like that they have given. First, same concept here. Tell the table. Tell the table first. Tell the table. Benefit, cost. Benefit, increase in contribution. Increase in contribution. Okay. Second, cost. What are the costs? Increase in bad debts. Increase in interest loss. Okay. Increase in recovery cost. These are the three things that we need to consider. Okay. Now, instead of increase in recovery cost, etc., we will get increase in the discount costs. Increase in the discount cost. Let us answer this. See here. Reduction in interest loss. In this question, contribution is not there. So the benefit of giving discount is what? Interest loss will be reduced. Loss of interest is reduced. That is benefit one. Okay. Next one, what is reduced? Because of this, my costs, okay, cash discount cost increase will be there. Okay. And bad debts will be either reduced or increased. So we will see three things: interest, bad debts, discount. Compare and we have to give the answer. Listen. reduction in interest lost. Existing, we are making 60 crore sale. 45 days, my money will be blocked at a rate of 18% given in the question. Note down that. That's why I did not mention the rate of return mentioned. Okay. Done. 18% already given. Okay. So 18%. So 60 crore 45 by 360 into 18. Previously, my 60 crore amount is blocked for 45 days in a 360-day period, and I am losing 18%. 1.35 crores I am losing. Okay. Now, under the first policy, what will happen? What will happen in my first policy is, see here, in this 60 crore, collection period is reduced to how much? 20% only. So 60 crore into other 20 days. I'm very sorry. 60 crore into 20 by 360 into 18. 60 lakhs only is blocked. Option 2, 14 days it is blocked. So 42 lakhs only is the loss. Okay. So reduction in interest lost. See there. First, previously my interest cost is 1 crore 35 lakh. Now interest lost came to 60 lakhs in the second option, first option. It came to 42 lakhs in the second option. Okay. See. Reduction in interest cost. 75 lakh means 1 crore 35 lakh minus 60 lakh. 75 lakh is the reduction in loss. That's the benefit. Second case, 1 crore 35 lakh came to 42 lakh. 93 lakh benefit came. Okay. Next. Calculation of bad debt. Lesson, this is very important adjustment. 60 crore sales. 60 crore sales. See here. See the question. In that, 40% will avail the discount. And how much will not avail? 60% will avail the cash discount. How many will not avail? 40%. This 40% only has a chance of bad debt. Because if they avail the cash discount, they will be anyway paying within 15 days. So there is no bad debt concept. So bad debt is applicable only to how much percent? 40%. On that percentage of bad debt will be applied. So 60 crore, 40% of the persons who do not avail discount in that 0.5%. So 12 lakh. Now option 1. Observation. 60 crore. How much? 60 crore is the sale. 60 crore is the sale. Next. In that 60 crore, 80% will avail the discount. Okay. 80% will avail the discount. But try to understand clearly. 80% will avail the discount means how many do not avail? 20% into 20% into 20% into default percentage 1%. 0.12 crores. 0.12 crores or 12 lakhs. So percentage change. Okay. Here half reduction, here half increase. So net of both 12 lakhs again stayed constant. Okay. So under old policy, bad debts are 12 lakh. Under option 1 also bad debts are 12 lakh. There is no change. That's why dash. There is no reduction in bad debts. But second case, 60 crore, 95 will avail discount. Means perfect 5% only. 5% are not bad debt. In that 5%, 1.5% of the customers are doubtful. So 60 crore into 5%. That value is subjected to bad debt. In that 98.5% are prompt. 1.5% came to 4 lakh 50. 12 lakh minus 4 lakh 50. 7 lakh 50. 7 lakh 50. So these two things, everybody please answer, understood or not? Honestly, you tell. Everyone, answer. Did you understand a different way of presentation? Everyone. Done. Next. See here. last and final working. Last and final what? Working. Cash discount cost. Let us understand. Previously, my value is 60 crore. The sales approach here, because variable cost, other things are not given. Sales approach. 60 crore is the value. 60% will avail the discount. 40% will go for non-availment. 60% will come for availment. In this, 1% is the discount I am going to give. 1 by 15, 2 by 15, 3. Okay. So 1% discount amount. 60 crore dispatch, 96. 60 crore and 3, 1 crore 71 lakh. So 36 became 96. 60 crore increase in cash discount. That's a loss to the company. Okay. Next. 36 became 1 crore 71 lakhs. Because of that, there is a increase of 1 crore 35 lakh. Negative here, positive here. Option 2 policy is very dangerous. Option 1 policy is recommended. So it is recommended to give a credit term of 2 by 10 net 35 since the net benefit is higher. Everybody, did you understand the logic clearly? Listen, here we are not comparing interest percent with the discount percent. To apply that formula, convert that into per annum, we are not doing that. We are taking direct amounts now. There we compared percentages. Therefore, we have to annualize that. Did you understand my point now? Okay, that's it. This is the area called as a debtors policy and debtors management. With regard to the discount policies also we completed. First of all, everyone answer. Did you all understand all the concepts in this area or not? Understood? That's it. This is the whole idea behind this particular area. So nothing great, easy concept. Just you need to do extra number of problems on this. Okay. Do more number of questions. After this, do another 5-6 questions of the same sort. Then automatically you will get the expertise. So you'll understand, you will gain momentum. You'll understand how the flow will continue. Up to here, everyone in the class. Okay. I'm taking out the next chapter in this particular working capital estimate. Did you all understand here up to the concept what we discussed? Okay, done. That is enough for your examination to understand all the questions. Okay. Mainly you have to practice the questions from your RTP or MTP, whatever the case may be. So take question bank or study material, anything, whatever document you are having, do the questions and solve them. Then you will get the more clarity. Okay. Next. I am now moving into the next area. Okay. I'm moving into what? Next area called as cash management. Which concept here? Cash management. See, in cash management area, there are 3. Okay, 2 I covered in FM. Third one has to be covered in costing paper. 2, Baumol model and Miller-Orr model, we will cover here itself. There is another segment of cash in management called as a cash budget, which will be discussed in budgetary controlling costing paper in area called as a cash budget. But I heard from the students that in costing it is not getting covered. Therefore, I will not cover now and take my time. I will cover what is there exclusively for CA Inter FM. Okay. I will upload one video in my channel clearly on cash budget. From costing only I will take the questions and I will solve. Same questions will come also in FM. So I don't want to waste time by unnecessarily discussing that. I will put a video on that. Just listen, a 1 hour video I will put on that. Let me first cover the main models called as a Baumol and Miller-Orr model. Everybody understood what I said? Yeah. Let's see. What is the first one? Baumol model. Baumol model. See. There are so much to discuss on this, but I don't want it to waste time. Okay, since it is a quick revision, let me revise what is the concept. Okay, regular batches, if you take, you will find the entire content there, you can understand. But this is a time to learn the overall impact of this particular area. So let me go directly into the questions. Okay, see. Baumol model targets on a concept called as an optimum transaction size. Optimum transaction size. So what is this optimum transaction size? Listen. Companies will have a lot of cash. Companies will have a lot of cash. Whenever cash is there is a greatest advantage as well as disadvantage. Obvious advantage will be, if you have the cash with you, liquidity will be there. No problem of liquidity. Anyone comes for payment, na, fatafat will make the payment and send them out. So the process of payment become very simple if you are having more cash with you. That's why I have written here. Cash is always an advantage or disadvantage means, yes, sometimes we have to maintain the cash for so many situations. See, that's why I have given the analysis there. Basics, motive one, transaction motive, compensatory motive, precautionary motive, speculative motive. There are so many motives in which companies maintain cash. Okay, now let us focus on this. Baumol model, what it says, let us understand. Baumol model says that if a company require this much cash, let's say 12 lakh cash, as I given in the example, how much is a cash requirement? 12 lakh. Our cash requirement per annum I call as a C equal to 12 lakh. So I have so many expenses. 12 lakh expenses will be there. For the 12 lakh expenses, I require cash. So I require, from the beginning till the end of the year, annual requirement is 12 lakh. That does not mean every day 12 lakh is required. One day I require 9,500. Another day I will require 20,000. Another day I will require only 150 rupees. Overall in a year, 12 lakh rupees is required. Okay. Now listen. But maintaining 12 lakh rupee cash, since overall in a year 12 lakh rupees is required, putting 12 lakh rupee cash in the drawer is not always a right idea, because cash don't generate any return. Sir, I am talking about cash, physical cash. I'm not talking about cash in bank. I'm not talking about cash in bank. Cash in bank will give a small return, yeah, 5% to 3% to 4% return. Current account is 0% return. Then putting in the cash box is better than putting in a bank. So the point is, cash in physical form do not give any return. Cash gives return only when invested. How much cash I require in a year? 12 lakh rupees to meet my expenses. But all 12 lakh you have to pay in a particular day? No, I have to pay over a period of 1 year. Then why you are maintaining everything in one day? Therefore, what they say is, maintaining cash balance, physical cash balance is not a right idea, is not desirable idea. Understood? Therefore, what companies have to do as per Baumol is, when you require 12 lakh cash, some amount you put it in marketable securities. Sir, what is marketable security? Which can be marketed and sold very easily. Most liquid securities, so you put that amount. That means if you want to sell now, you have to sell. Like that it should be. Secure and saleable. Put that amount in the marketable securities. Okay. So when you put that in the marketable securities, what will happen? Your money is not idle. Like a bank, it will not give just 3-4. Like normal marketable security, it will give 10-12% return. Okay. So till you withdraw, it will give return. Once you withdraw, you can use it for your purposes. But don't keep it as a physical cash. Don't just put it in the bank account. Put it in the marketable securities. So some part of the amount we have to invest in the marketable security. Some part we put as a physical balance. Understood? So whenever company wanted cash, sell the marketable securities and get the money. Okay. Sell the marketable securities and get the money. Whenever company has excess cash, buy the marketable securities and transfer the money to marketable securities. Invest there. Okay. Now question. Which is good? High marketable security, low cash. High cash and low marketable security. Listen. You have to decide on certain things. See. I put all my 12 lakhs in marketable security. I will put all my 12 lakhs in marketable security. Okay. You will put all 12 lakhs in marketable security. Now there is a great problem that you are going to face. I want 150 rupees. You have to sell 150 rupees worth marketable securities. On that also they will charge a hefty brokerage. When the volume is big, brokerage is low. When the volume is low, brokerage is big. So when you start taking even 10 rupees or 5 rupees, 3 rupees also out of your, okay, that also if you start taking out of your marketable security, lot of transaction costs will get attracted. Lot of transaction costs will get attracted. Okay, so what is the point here? More amount in marketable securities. Problem is, even if you want small amount, you have to sell them. Selling them require a transaction cost. Understood the point? For converting marketable securities into cash. Oh, okay, sir. Then I will put everything in the cash form. Then you will lose interest. High marketable securities have high transaction cost, lesser interest loss. High cash will have lower transaction cost, but higher interest loss. So, see here. Advantage. Putting more amount in marketable security, advantage. No blockage of cash, no risk of pilferage, theft, etc. That's correct. But disadvantage? No clear prediction as to how much cash is needed. Heavy transaction cost to sell marketable securities for multiple times. Therefore, Baumol model talks about optimal level of marketable security, optimal level of cash balance a company has to maintain. Okay. See, if we sell marketable securities in small lots, I want 150 rupees, you will sell 2 marketable security. Then advantage is less opportunity, loss of interest, but higher transaction cost. If you sell bigger lots of marketable securities, when you sell big amounts, okay, transaction cost may be less, but opportunity cost will be more, because if you sell marketable security in a large quantity, cash balance will increase, which will lose the interest. First of all, everyone, answer my question. Did you understand what I said up to here? Okay. What I will do is I will put you the notes before you. Just read the notes. You will understand half the content. Completed, everyone? Shall we continue? Okay, done. Now let us go into the answers. See, hence the model emphasizes on optimum transaction size, okay, at which interest loss and transaction cost will be minimum. Okay, it is represented by the formula. Optimum transaction size means what? How much amount of marketable securities you have to sell at one time. 150 rupees ki, 250 rupees ki you should not sell. How much is optimal? Depending on your formula, you have to judge. 2C, C means the annual cash requirement. T means transaction cost per transaction. That is very important. Per transaction. I means interest cost. Okay. Sometimes it may be given in rupee or sometimes it may be given in percentage. Let's see. ICA style illustration. Projected annual cash usage. So in that example, 12 lakh, like that here, 37 lakh 50,000. Overall, throughout the year, it will be there. Okay. Next. Sorry. Company periodically sells marketable securities to meet the cash requirement. So they will sell. Marketable securities, if you put 12% interest, you will get. But each transaction you do, 40 rupee per transaction they will charge. Use Baumol model to calculate optimal transaction size, average cash balance they have to maintain, transfer required during the year. Okay. First, average optimal transaction size. What is the formula? 2 into C into T. 2 into C into T. What is the C? Annual cash requirement. Take 37 lakh 50,000 into 40 into 2 divided by the interest cost. Divided by the interest cost. How much is the interest cost given? See here, 12%. Okay. For that root, 50,000 is the answer. Everyone got the same answer or not? Apply the formula at 2 into 37 lakh 50,000 into transaction cost per transaction 40 divided by 12%. Okay. 250 crore. For that root, 50,000. Everyone, have you got the answer? 50,000. So at any one point of time, you should sell 50,000 rupees. Means for 30,000, 40,000 rupee, 10,000, 150 rupee, 250 rupees, don't withdraw. See, at any time you withdraw 50,000, sell marketable securities for 50,000. Cash 50,000 will be there, correct? That cash came down. Okay, that cash came down. It became zero. Again, how much to sell? Again, 50,000 you sell. Though requirement is only 2,500, at any one time, you have to sell 50,000 worth marketable security. That's the optimum transaction size. Understood? For example, I sold marketable securities here one time. How much you have to sell? Don't sell 1 lakh. Don't sell 1 lakh. Don't sell marketable securities worth 250 rupees. Sell any time marketable securities worth 50,000. Sorry, I will sell. It will become zero. Again, what to do? Again, sell 50,000. Totally 37 lakh 50,000 rupees you deposited in the, you invested in marketable securities. Yes. How much to withdraw at any time? 50,000 you withdraw any time. Okay. Whenever cash balance becomes zero, again sell 50,000 worth. Okay. So this is the point. Next. What is the average cash balance? What is the average cash balance? What is my average cash? 50,000 rupees is the total optimum size I require. Correct? Average will be half of that, which will be called as 25,000. Which will be called 25. Sir, I didn't understand this. Why we are calculating average? I can tell the logic, but it take time. I will try to complete it very fast. See here. let us say 50,000 will be 50,000 will be useful for 1 month. 50,000 will be, or 50,000 will be useful for 10 days. 50,000 is useful for 10 days. Okay. Days. Okay. Next. On the left hand side, we will put cash balance. We will put cash balance. Cash starts here. Daily we will use. Slowly it will come down. Correct? 10th day it will become 0. Ante cash balance, if you ask me, if I tell my cash balance is 50,000, it is wrong. The cash balance became 0, then also it is wrong. When it is 0, it is 0 on 10th day. When it is 50,000, it is 50,000 on first day. So 50,000 is wrong answer, 0 is also wrong answer. Correct or not? For example, I ask you how much is the cash balance on 7th day. 50,000. Now you have cash balance. No. Evenly when you consider over 10 days, 5,000, 5,000, 5,500 reduction happened or not? By 7th day, you are having only 2,500 in your hand. Or 2,000 only in your hand. How can you tell that you are having 50,000? Correct or not? So you are not having 50,000. Sir, I'm having 0 now. No. I am on second day. I'm having 40,000 in my hand. Then how can you tell that I'm having only 0? Highest is wrong answer. Lowest is wrong answer. Take an average. So what they do, 50,000 is the opening, 0 is the closing, average is 25,000. That's how this average cash balance came as 25,000. Instead of people, I told so many times, world don't want minds which will think. World always want minds which follow. Therefore, no one will question if I give a formula. At any point of time, these fools want only answer. Na? They don't require any logic behind why they are doing. So, liko, write down. Half into OTS, half into OTS. Why half into OTS? You are a fool, na? Follow like a fool. Like this, they will believe. But that's not how the FM has to be learned. So you should know why that logic came. That is the reason. Everyone understood the concept clearly. Okay, next. Number of transfers required. 37,50,000 is the total amount. At any time you require 50,000. So 37,50,000 divided by 50,000, 75 transfers are required. That's it. With this, we completed Baumol model type. Everybody understood Baumol model clearly or not? Okay. Next. See, this is another question, a 5 marks question, which already came in exam. Don't write anything. Just understand. Read the question and understand first. Have you read the question? Have you read the question? Okay. See here. See here. So this is also a simple question only, but understand properly. Annual cash requirement 10 lakh. Marketable securities, different lot sizes they have given. 50,000, 1 lakh, 2 lakh, 2 lakh, 50, 5 lakh. Conversion cost means transaction cost 1000 per transaction. Okay, per lot. Interest is 5% per annum. Prepare a table indicating which lot size will have to be sold by the company to calculate economic lot size. See here. Can you do this calculation first? 2 CT by I. 2 into annual cash requirement 10 lakh into 1000, okay, divided by 5% square root. 2 lakh. What is this 2 lakh? 2 lakh is the optimum economic lot size. Also called, in the materials and costing you will do EOQ. Materials costing la materials chapter is there. In that you will do EOQ. Same model na EOQ type. Okay, same like EOQ. That's why a cash management chapter, some part covered already in cash budgetary control. Some part is covered also already in materials in the form of EOQ. Okay, so nothing great in this. Just you need to understand the idea. Once you understand the idea, no problem solving becomes easy. So anyway, let us cover this. So prepare a table indicating which lot size will have to be sold by the company. Okay, sir, how I will know? Listen carefully. If I sell in lot sizes of 50,000, if I sell in the lot sizes of 50,000, 10 lakhs divided by 50,000, 20 lots I have to sell. Each lot is 1,000 rupees. Means 20,000 is my cost. How much? 20,000 is my cost. Okay. Put it away. One side. 20,000 is the cost. Transaction cost. Understood? 20,000 is the transaction cost. Next. See, I have given here. Directly see there. Time waste will not be there. 50,000 lot size. How many transactions we have to do? 20, as I said. How much? 20. What is the average cash balance you will maintain? 25,000. How much is the interest cost? 5%. 25,000 into 5%. 1250. I said na, you should not charge interest on entire higher amount, entire lower amount. Charge on average amount. 1250. So 20,000 rupees is the transaction cost. Okay. Interest cost is 1250. Total cost is 21,520. If you do 1 lakh rupee lot size, 10 transactions you have to do. 10 into 10, 10,000 transaction cost. Okay. Then what will happen? 1 lakh average cash balance will be 50,000. Interest cost totally 12,500. Okay. Optimum size we got 2 lakhs. Na? That's why in the 2 lakhs, we will get the lowest cost possible. Okay. 2,54,000 transactions, 4,000. That's why number of transactions increase. Na? Transaction cost increase, but interest cost reduce. Number of transactions are reduced. Na? Transaction cost reduced, but interest loss will be increased. At optimal level, the increase in transaction cost and the increase in interest cost will be optimal. So that's why 10,000 we got. So optimal lot size is 20,000, 2 lakh. So even if you check this way, answer is 2 lakhs. Everybody understood this answer clearly? Everyone reply. Everyone answer, yeah? Understood? Okay, done. Next, Miller-Orr model. Miller-Orr model. Sir, what is this Miller-Orr model? What it wanted to convey? Let us understand this with some amount of clarity. See, Miller-Orr model is a unique kind of model which will concentrate on How much cash balance we need to maintain? Already we have seen that. In what intervals we have to maintain the cash balances. See, I said this way. When cash reaches 50,000, when cash reaches zero, then sell the marketable securities and get money. When cash again reaches a level, buy marketable securities and put the money in marketable securities whenever you have. But what is the level? There is a concept called as a reorder level, okay, buffer stock, all these things in material costing or not? Everyone reply. How much is that reorder level? I want that reorder. You send me the economic order quantity now. I don't want that now. I want reorder level. At what level I need to sell? That's why Miller-Orr model came. Cash balance is here. It started. It increases, decreases, increases, decreases. A peak will be reached here. At that time, you start investing in marketable securities such that cash balance will come down. Come down, come down. Company made expenses. Again, it is falling down. After reaching a level, again sell marketable securities and get the cash. Again, it will go like this. Company will go like this. Company will start with the cash. Sales happen, cash slowly every day. Sale will be there, expenses will be there. Sale 100, expenses 40. So more sale is there, goes on rising. Someday we have a very good purchase, it will come down. When it come down, we require cash, sell marketable securities, again increase the cash balance. So, but what level I need to take action is a question now. Okay, there are 3 levels they have given. Okay, first one, upper bound, lower bound, return point. Upper bound, lower bound, and return point. When you reach a peak, upper bound, okay, when you reach a peak and a cash balance reached a peak level, physical cash, what to do? You have to purchase marketable securities and reduce the cash balance and come to the return point. This line is a return point. When the cash balance is falling very low and reached a particular line here, okay, reached a particular line here, then what you have to do? Immediately sell the marketable securities and get the cash again, return to this return point again. So if you fall, come to return point by selling. If you raise, come to return point by buying. Buying of marketable securities reduces cash. Selling of marketable securities increases the cash. In both cases, come to the return point at any time. Now question, sir, what is the upper bound? What is the return point? What is the lower bound? How to calculate? See, upper bound means lower bound plus spread. Return point means 3 points are there. The upper bound, lower bound, return point 3. In this, 1/3 is the return point. That's why 1/3 of spread. So lower bound plus 1/3 of spread. Lower boundary plus 1/3 of spread. Upper boundary means what? Lower boundary plus full spread. Return point means lower boundary plus 1/3 spread. So what is the spread? 3 into cube root of 3 by 4 into T by C. 3 by 4 into TC. TC means the transaction cost. CFE means cash flow variance per day. All these data they will give in the question. This is not the time to learn about formula. Just mug up the formula, do the answer first. Exam you should get the marks. So what is the formula for upper boundary? Lower boundary plus spread. Return point, lower boundary plus 1/3 spread. Spread means what? 3 into cube root of 3/4 of transaction cost and cash flow variance per day divided by interest per day. Minimum cash balance 10,000. Cash flow variance 65 lakh 50,000. Interest 0.05% per day. If they give in total per year divided by 365, you have to do and calculate. Transaction cost for each day 20. Optimal LB, UB and analyze. Spread 3 into cube root of 3 by 4, all these na 3 into cube root of 3 by 4 into 20 into 62 lakh 50,000 cash flow variance divided by 0.025%. 21,646, we got the answer. Upper bound means what? Lower bound plus spread. Lower bound already given at 10,000. Minimum cash balance means what? Lower boundary 10,000 plus spread. Upper bound return point means 1/3, 17,250. This is our answer scheme. That's it. Everybody answer. Cash management question. Everyone understood clearly? Yeah. Everyone answer? Understood clearly? Cash management question. Done. Okay. Now we completed working capital management concept. The main thing is that working capital estimates already there in my channel completely. Last revision time I have done. Okay. Second, debtors management is most important. Third one is the cash management. These three are the most important ones in this particular area. I covered all these. So we listening everyone. So in the YouTube live previous I covered leverages. Next one I covered the chapter dividends. Now we covered the working capital. Already covered capital budgeting. Clear. So in the YouTube channel, last attempt revision is there. Last attempt, previous attempt, last 5 years like FM syllabus is same. So you need to go back and check that. Cost of capital and capital structures also I have done. Just listen to that and complete. More than enough for your examinations. Okay. So everybody, please tell me, did you all understand? My only thing that I have to do is cash budget I will upload. Okay. Cash budget I will do and I will upload that. Because cash budget is there in costing, but many students said me that costing faculty did not cover there in costing also. So therefore, that risk is also there. I don't wanted to take that risk also. So I will be covering out and I will be putting in my YouTube channel directly. Max one day I will make a video on cash budget, 1.5 hour max, including the study material questions I will do, so that you will get a full clarity also on that particular area. Everybody, did you all understand the concepts clearly? Yeah. So thank you very much. Prepare well for your examination. If you have any doubts, you can put the message in my Telegram channel or you can personally message me. Whenever I find a free time, I will definitely reply for you. Stay in contact with the Telegram channel. Any update, I will put there only. One, Instagram. Instagram, I don't recommend because you know why. One is YouTube channel. Stay in contact with that. Second one is a Telegram channel. Instagram, optional. If you are already using it, if you are having a self-control that you will use only for understanding or only to get the updates from the faculties, then use it. But if you are having a problem with your self-control, okay, Swayam Niyantrana. If you have the problem in that, please don't do that. Skip that YouTube, Instagram, follow the Telegram channel and YouTube. That's it. All updates I will give there, all documents, everything I will place there. Okay. So prepare well for the examination. All the very best. Reminding all videos, whatever the case may be, are available in the YouTube channel already. You can just check there. You can complete. Clear? Yeah. Thank you very much. All the very best. Prepare well. I should see you in final again. We will give left, right, center to CA final AFM. For that, you require a lot of clarity at inter-level. That's why we are doing that much of hard work. All the very best. My best regards to you and to your parents as well. Okay? Make them happy. Prepare well. Okay? All the very best. DT also, agriculture income, all those concepts are uploaded whenever you need. DT also, I will be putting all updates there. Where a level recordings have come for DT also. So stay in contact with that channel. You will get all the recording details. Okay. Thank you very much. Bye. Okay. So let us begin with the concept. What is the name of the topic we are going to start with? Name lone very clear. See here. If you take the balance sheet of a company, there are two kinds of assets. Number one will be fixed assets. Number two will be current assets. Okay. Fixed assets and current assets are two types of assets. Sir, fixed assets and current assets won't come and fall from sky. We have to buy them. Out of what you are buying? Equity share capital, reserves and surplus, debt. Next one is current liabilities. What is it? Current liabilities. Simply to tell, what is that? Creditors, other kinds of payables, etc. All these things will be there. Those all will make you to buy this. So now listen carefully. Fixed assets, already we discussed. Where we discussed fixed assets? Capital budgeting chapter. Tell me, investment in two areas.
Already I told you, Modigliani-Miller model says that what is important for a company? Which is not relevant? Financing and dividend decisions are irrelevant for the company growth. Company grow only if there is a investments can be of two types. Investment in the fixed assets. Second one, investment in the fixed assets investment, a capital budgeting chapter. Current assets investment will be working capital chapter. Working capital and capital budgeting is a investment decision chapter. Which chapter? Investment decision. It's an investment decision. Working capital is a investment decision. Capital budgeting is a investment decision. Capital structure theory, leverages, dividend, cost of capital, these are all financing decisions. Listening? Let us begin. So the point is, equity share capital was raised. Reserves are already there in the company. Debt is also there. Along with that, some creditors are there. Using all these, company will make investment in the current assets of a company. Try to understand clearly. There is a wrong notion people are having. The wrong notion is current assets will be purchased out of current liability. Answer is absolutely wrong. Current assets need not be acquired by current liabilities. Current assets can be acquired by long-term liabilities or short-term liabilities. Are you understanding or not? I will give you one example. Please see the screen. Liability, asset, long-term, short-term, fixed asset, current asset. See this point clearly. Long-term liability, which liability? Can be used to purchase fixed assets, can be used to purchase current assets. Short-term liability cannot be used to buy fixed assets, can be used to buy only. This is the meaning. Lo, do you know why ratios analysis chapter la first ratio? Liquidity ratios or solvency ratio? Which ratio? In that I will discuss about this. Whenever you are creating a fixed asset, whenever you are creating what asset? It should be created out of long-term asset only. Simply to tell short-term, long-term liability only. Short-term liabilities you should never purchase long-term assets. I told you this point in the ratios. First one, liquidity ratios, so we will discuss about this. The moral of the story is very simple. They wanted to tell that whenever you wanted to acquire fixed assets, acquire only out of the long-term liabilities. You should not use which liability? Short-term liability you should not use. But vice versa is permitted. Do you know what do you mean vice versa? Can we use long-term liability to finance the short-term assets like current assets? Yes, you can use. That's why even till today, latest Ola went for a public offer, correct? Which offer? They raised money. You know or not? In the money raised, 21% of the money they said in the prospectus that they are going to use for working capital. They are going to use for? Tell me, IPO money will be raised in the form of loan or money will be raised in the form of equity shares? Long term or short term? Using it for working capital. Working capital is a short term one. So there is no wrong in using long term for short term asset. But short term liability cannot finance the long term assets. Is become very, 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 very dangerous. One example I will give and I will stop. I wanted to purchase a house. House is a long term asset, short term asset. By taking 3 months loan I have taken. How many months? 3 months. 3 months is a short term loan, long term loan. Building is a 1 crore worth 3 months loan. And I have to pay the money within 3 months completed. 1 crore worth asset. How can I pay? I have to sell the building and I have to pay. Then why you bought? Clear or not? Or else whatever assets are there with me, I have to sell them and I have to pay you. Listening? Or second example, I took a loan for 30 years and I purchased a house. Now what will happen? The total 1 crore value will be broken into small parts. Every month I will be paying only somewhere around 55,000, 60,000 I will pay. Now my salary is 1,50,000. Example, monthly. 60,000, 50,000 is not a problem for me at that time. So always long-term assets should be created only out of long-term liabilities. Short-term assets should be created maybe out of long-term liabilities or short-term liabilities. No problem. We are now discussing about the short-term assets or long-term assets in this chapter. Everyone? That's why capital budgeting chapter you see, nowhere you will see all these kind of short-term loans, credit card, all these things will not be there. All are big equity, debt, these only will be involved in capital budgeting projects. Clear? Let us begin. Please listen carefully. What is the logic of this chapter, working capital estimates? Working capital estimates is the first chapter in working capital management. The name of the chapter is working capital estimates. In this chapter, we are going to estimate the working capital amount. What we will estimate? Working capital amount. How much working capital amount is required in a company? I used to give an example in the class for the regular classes. If you remember, same example I will just tell for a minute and we will start with the problem. See here. Shall we? Whenever company wanted to go for company wanted to go for, do you know what is a cash credit? Cash credit is also called as, tell me what is this? You know what is a overdraft? What is a overdraft? Overdraft is something like a credit card. Overdraft is something like what? Credit card. Means what? Bank will finance you the money. First you buy it. Later you can pay back to the bank. Are you understanding the point or not? Listen carefully. I will ask you a question, please. You went to a bank. You ask the bank, please give me some short-term loan to continue my business, not to buy fixed assets, to continue my daily business. Okay, daily what you are required? Daily I require stock, daily I require labor, daily I require some overheads to be incurred. To finance that, please help me, you ask the bank. Bank said that, okay, I will help you. How much amount do you want? You said, I want 4 lakh per month, you said. Then bank asked, why 4 lakh? 4 lakh randomly I asked. Randomly don't ask. Have a correct projection as to how much amount you want. Sign with a chartered accountant is required. If both happen simultaneously, then we will give you the loan. Those are only called as projected financials in our CA industry. Chartered accountants are extremely popular in doing that. What statements? Projected financial statements. What is a projected financial statement? Name lone clear. Projection means actuals or estimates. This is estimate. You went to a bank. You asked the bank, please give me money for my working capital. For my what? Loudly, for my what? Daily working I want money. For fixed assets already I have taken big loans from the bank. I want loan not for fixed assets. I want loan for my working capital. Every day working I want some capital. So that's why working capital. Bank asks, how much do you want? I said 4 lakh. Why 4 lakh? 4 lakh randomly I asked. Randomly we will not give. There should be a projected statement. What statement? Projected statement. We exactly want at least nearest estimate. How much amount do you want? In that motive, this chapter has started. Which chapter? Working capital estimates. What we are going to do in this chapter? In this chapter, we are going to calculate amount of loan we are going to ask from the bank. Amount of? We are going to ask from the, as a long-term loan or short-term loan? How much amount you should ask? That's what we are going to do in this chapter. Listening or not? Whatever comes to your mouth, if you ask, they will throw you outside the bank. There should be some calculation for that. Listening? How to understand that calculation? How to know that calculation? Sir, listen. I wanted to buy a laptop. Amount is available. Means what? There is a MRP on this. Are you listening or not? There is a MRP on laptop. MRP is 1,50,000. So 1,50,000 rupees I will directly ask you. I wanted to purchase a building. Building is having some value. 1 crore. 1 crore value loan I will take. Listening? Do you know what is the problem with the current assets? Value changes every day. Stock today 1,000 kgs. Tomorrow I will sell 500 kgs. 500 kgs is available. Next day I will again buy. Value of stock will be same every day, will fluctuate. Therefore, these are called as a fluctuating assets. Loan taking is very difficult. Listening everyone? Fixed assets once purchased, used for 5-6 years. Working capital, stock, etc. will change every single day. Not every single day, every minute also it will change. At that time, what problem will come? How much amount I should ask loan is very, very difficult. On that, with some basic assumptions, finance management has brought one concept called as a working capital estimates, also called as a working capital management. So how to understand this is a subject matter of this chapter. Did you understand or not? Why I said all these things before I giving the problem is, if you understand intro properly, chapter really becomes very, very easy to understand. Listening? So tell me, what is the motive of this chapter? Asking loan. And type in over. Asking a loan. Which loan? Short-term loan. But how much to ask? For that these calculations came. Okay? See the screen. One last point. Whenever I say working capital estimates, you need to understand one cycle. A cycle name is called as a operating cycle. Which cycle? Also called as a working capital cycle. Also called as a working capital cycle. See there. First, what you brought into the business? Please listen. What you brought into the business? This cash becomes bad. This cash becomes. To this raw material, I added labor, I added the overhead. It will become work in progress. Okay? Intensively the mechanization, everything happened. Work in progress will become the finished goods. This finished good I will not put in the dustbin, obviously. I will put it for the sale. Who is created? Debtors. Who is created? Debtor. Debtors will again get converted into what? Cash. Debtors will again get converted into cash. This concept is called as what? Working capital cycle. Working capital cycle. Okay. See here. This particular working capital cycle will be expressed in days. Working capital cycle is estimated not in amount. Working capital cycle is a time. This attempt I am expecting question on working capital cycle. Then I am asking a question on working capital amounts, because last attempt they asked amount. So this attempt chance is there, they can ask a question on working capital cycle period. One question, two questions are there in our book. I will show you. Those are not there in the study material also. Old RTP questions I have taken and I prepared it. Sir, before going into that, please see here. What do you mean by this cycle? What do you mean by this cycle? Loudly, what do you mean by this cycle? What is a working capital cycle? It is a time taken for cash to become cash. It is a time taken for the cash to become cash. It's called as what cycle? Working capital cycle period. It's a time taken for the cash to become the cash. So, cash will get converted into raw material should go as a work in progress as a finished good as a debtor, and debtor has to again get converted into cash. Now I'll ask a question, tell me. How much cash I have? This 1 lakh will become 1,50,000 and come back. Profits also will be added. Loudly. It will come back. But how much time it will take for me to come back is a question now. Okay? See the screen. Raw material, my stock will be staying in the godown. Sir, whenever truck comes into the factory, it will go to the godown. Immediately it won't go to the production process. Are you understanding or not? Sorry, sir, I will ask a question. Your parents will go to the grocery shop and buy the products for a month time or not? For example, they bought 2 kg sugar. 2 kg sugar they will use in the first day, na? And a full tealer 2 kg sugar they will make. Are the tea or sweet? That means what you have to understand, every day they will use. Every day they may use, but every day everything they don't use. Are you understanding the point or not? Or sometimes what they will do, they will buy certain things in advance itself, which are not subjected to speedy decay. Okay, which can store for 4-5 months, 5-6 months, etc. Oil is there, it can store even for 4-5 months, no problem. Therefore, for example, if I read 2 oil packets, I may take 4 oil packets if there is an offer. I can keep it with me. That means your stock is bought, but it is kept in the godown. Kept in the same logic they will apply also on the raw material. See there, cash I purchased raw material, but entire raw material is not going into production process immediately. Raw material will be in the godown for loudly. Now it will go into the manufacturing process. It takes 20 days in the manufacturing process. After that, work in progress will be over. Then finished good will stay in the stock form for around another 10 days. After this, I will sell. 10 days la all goods I will sell. Debtors, I have a credit policy of 30 days. I have a credit policy of how much? 30 days. Again, it will become the cash. So, count the days now. 10, 20, 10, 30. Totally how many days? 70. Everyone loudly. Now you tell me, I will listen. How many days is my operating cycle time? How many days? 70 days. Okay, na? Now listen carefully. What is this? Everyone? With that what I bought? Let us say for example, this cash plus some creditors are also there. Who are also there? Loudly? Creditors are also there. Means what? They will give goods on credit, purchases on credit. What on credit? Loudly, sir. Purchases on credit. What do you mean purchase on credit? Money given, cash given, not given. Just I made a purchase. They have given me 15 days time. How many days time? 15 days time. Now tell me, total operating cycle will be? Total operating cycle will be? No, it should be reduced. It should be reduced. Sorry, let us take 10 days. Creditors is an advantage or disadvantage? Advantage. You need not pay them. Therefore, reduce that. 70 days minus 10 days. How many days? 60 days. Loudly. 60 days. Do you know what do you mean by 60 days? What is 60 days? It is one cycle. It is one cycle. Yearly, how many days are estimated? One cycle has how many days? How many operating cycles this company is having? 6. 6 is the operating cycle. This is what they will ask in the operating cycles. Are you understanding the idea behind this or not? But one very important observation is required. How many cycles? Number of cycles, if they increase, it is good for the company. It is good for the company. One cycle means what? Your time taken for cash to become cash is 1 full year. 1 full year. What? Listening everyone. Now tell me, how many days it will take for me to make cash into cash? 60 days. Loudly? 60 days. That means my cash is blocked for how many days? 60 days. How loudly? 60 days. Now tell me, for this 60 days my cash will be there or will not be there? Therefore, the bank should finance me 60 days of working capital requirement. How many days? 60 days of working capital requirement. I want loan from you to tackle my 60 days of my working. Now tell me, if I can reduce this, loan amount also will reduce or not? Yes, sir, my daily expenses are 50 rupees. My daily expenses are 50 rupees. Example, daily expenses are 50. Tell me, 10 days expenses is how much? 500. Answer. 500. 20 days expenses will be? Now tell me, as the number of days is increasing, requirement of amount is increasing or decreasing? That's what. If you can reduce the operating cycle period, loan taken from the bank also will reduce. Are you understanding or not? Last example, and we'll start with the problems directly. See here. I am staying in a hostel. Example. I never in my life I did. So, I am staying in a hostel. So when I am coming with my bag from Hyderabad to Chennai, my parents said that how many pairs of dress you want? Then I got a doubt. I called my friend in Chennai. I said, "Are laundry, how much time it will take in Chennai?" I asked. Which one? Laundry. Laundry means if I give an untidy clothes to you, it will be cleaned, ironed and given back to me within how many days? I asked. Are you listening? So see here. When I use the cloths, give them, I will use the cloths and I will put in a bag. That particular dress will be in the bag for 2-3 days because every day Dhobi will not come. 2-3 days it will stay as a unclean clothes. That person will collect after 3 days. 3 days it is in the form of untidy clothes. 3 days after, the laundry person will come and collect it. After collecting in priority, they don't wash my clothes. They will keep, some other persons also will be there. Na? He will take another 3 days. He will take another 3 days. He will take another 3 days to wash it. He will take another 2 days to iron it. Another 1 day he will take and he will return back. Do you understand my point or not? Let us say, for example, he is taking how many days? 3 days for coming, 3 days for ironing, 1 day for iron and 1 day for giving back. Let us say on an average, how many days he is taking? Do you know what do you mean by 7 days? One pair if I use today, this will again come back to you after how many days? 7 days. In a month, let us say, for example, there are 28 working days. How many working days? 28 working days are there. Excluding one Sunday or 2 Sundays if you take, around 28 working days are there. 28 working days I want. So tell me, if I use one pair today, it will come back to me after how many days? Loudly? Now tell me, one pair will come to me after 7 days. How many pairs I want for my 28 days? Everyone tell me? Now did you understand the point or not? Now, Dobby is taking 20 days time. How many days time? Loudly answer, yeah. 20 days time the Dobby is taking. Now tell me, 20 days means one pair if I use and throw it today, it will come back to me after how many days? It will take 20 days to come back to me again. Clear or not? That means if I use a pair today, it will again come back to me after 20 days. Second pair if I use not 21st day, it will again come back. Means technically I need to have around 20 pairs with me such that I can tackle my needs. Correct or not? Now tell me, purchasing 5 pairs, 6 pairs, purchasing 20 pairs, which is more costly and financially more viable for me? 5-6 pairs is easy for me, or 20 pairs is easy for me? Where more finance is required? Where less finance is required? Now tell me, when operating cycle is reducing, money flow is reducing. When operating cycle is increasing, money flow also will increase. So to reduce the money outflow, what you have to increase? What you have to decrease? I'm very sorry. What you have to decrease? Operating cycle time. If you reduce, automatically your finance also will reduce. That's what we are going to do in this chapter. Did you understand the operation of this chapter or not? Let us start doing the problems now. Without any further ado, let us start. See here. One by one questions we will do. See here. No need to write anything, just observe. Big questions only we will do together. Small questions we will directly do here itself. See here. Budgeted production. How much is the production required? Raw material consumption per unit. Cost of raw material. 1 second. Cost of raw material 4 kgs. And next one, raw material holding period. Now you should tell me. How many months my raw material will be blocked in the godown? Today truck came, raw material kept in the factory. Okay, immediately raw material directly jump to production process. Huh? No, it will take some time. So tell me, raw material will be in the raw material stock form in my godown for how many months? You should not see. Now tell me, what I bought? What is blocked? Cash in the form of raw material is blocked. Don't see raw material. Here raw material is not blocked. What is blocked? Your cash in the form of raw material is blocked in the godown. Are you understanding or not? Answer. Yes, shall I tell you one example for you to understand? Bank gave loan. What gave? Bank gave what? Loan. 1 crore loan. I bought a car with 1 crore. Example. Okay. I bought a car with 1 crore. Okay. Na? My car is going like this. I will see the car. Bank will see 1 crore cash bag. Did you understand the point or not? How the people will see? Perception of two people will be different. I will see a very good lavish car. Bank will not see lavish car. What bank will see? 1 lakh cash back wheels also in cash form. 1 lakh is going on. My 1 crore is going like that. Bank will see cash in everything. We will see the assets. Company see the assets. But from the point of view of bank see what? 2 months of your cash is blocked in the godown. Do you understand the point or not? It's all a finance perception. The way you see. Okay, see there now. First point number 1. How much budgeted production? To produce 60,000 units, how many kgs of raw material we require? 2 kgs. Each unit ki 2 kgs. Okay, 1,60,000 units ki how many kgs? 1,20,000. Each kg, what is the cost? Do you have calculator? Don't see like that. Please do calculations and tell me the answer. 4 lakh? What is 4,80,000? Amount blocked in the form of raw material for how many years? 1 year. No. What is this first line? Yearly budgeted production. How much? What is the raw material consumed per unit? How many kgs I need to buy? Each kg costs how many? So total annually how much I need to spend? 4,80,000 is for 1 year, 1 month, 1 day na? 1 year. How much I need to spend? 4,80,000. But it is blocked for full 1 year, 2 months. Therefore I should ask loan only for the 2 months period. 4,80,000 into 2 by 12. How much? That's the answer. Over. First question completed. Everyone understood the working capital raw material estimate or not clearly? What we have done, tell me. Did you understand what we have done? Tell me, how much is the raw material production? What is the budgeted production, financial production? How much? 60,000. Each unit of financial product require how many kgs of raw material? So how many kgs of raw material totally required for 1 full year? Each kg requires how much money to be invested? Answer. Raw material will be blocked in the godown for full year, 2 months. So money blocked in the form of raw material will be only for 2 months. So for 2 months only you should ask for the loan. Bank won't give for extra 1 day also. Listening? So totally how much is the answer? 80,000. What is 80,000? Bad everyone. What is 80,000? Amount blocked in the form of raw material. So bank will give a loan of how much? Everyone? For full finance or for financing your raw material? For financing your raw material, they give you how much loan? Now I will ask a question, tell me. What is this, this amount of 80,000 called as? What is 80,000 called as? Array, please be here, yeah. Amount blocked in the form of? Amount blocked in the form of? Okay, na? Now tell me. Work in progress. What is it? In the work in progress also what will be there? Raw material will be there. Labor will be there. Overheads also will be there. Correct or not? Tell me. Raw material blocked for how many months? Sir, my total production process is 6 months. Okay, let us say. Raw material is blocked for how many months? Full 6 months. Because in finished product also raw material is there. In work in progress also raw material is there. In raw material also raw material is there. Sarvantaryami. Everywhere it is there. All pervasive. So, the logic of this chapter is people don't understand the ideology behind this particular working capital chapter. You are seeing raw material as a raw material stock in the first stage. Second stage, raw material in the work in progress form it is there. Next stage, raw material in the finished goods format is there. Are you listening? Table is a finished product or raw material? Answer. Wood is the? Wood there in finished good or not there? That's all. Are you understanding or not? Raw material in wood form 2 months. Raw material in cutting form 1 month or 2 months in work in progress. Raw material in the table form another 2 months. Did you understand the point or not? So that's why always try to understand. Whenever you ask finance from the bank, bank will ask the breakup. Bank will ask the raw material blocked in raw material form is 80,000. Raw material blocked in the form of raw material 80,000 I will give you. Raw material in the work in progress again I will give you loan. Labor in the work in progress format I will give you loan. Listening or not everyone? Hello, I am talking with everyone. Yes, tell me, item by item we need to ask for the loan. Overall, give me 5 lakh, give me 10 lakh, banks won't give. Tell me the breakup clearly. On an average, your money will be blocked in raw material stock form for how many months? Therefore, for that I will give 80,000. Raw material next after 2 months will go into, and still money is blocked in raw material, but not in which format? Raw material format, but it is in which format now? Working capital. For that you ask the loan again separately. That's why we will ask money on a overall basis, a stage wise of completion. That's how this concept has started. Are you understanding the point or not? Now I doubt you what you understand in process costing. So what is that, sir? What you are talking? Do you know that in the costing there is one area called as a process costing, everyone? Yes, in process costing, there will be a percentage of completion. Raw material, some percentage, work in progress, finished goods, labor, overhead completion percentages. Have you seen or not? Yes, so, like that. Process costing, this is what they make you to learn. Na? Sorry, okay. Listen, I don't have time to argue with you. So, first point number 1, raw material concept, everyone understood clearly? Yes, understood? Yes, what is 80,000? Amount blocked in the form of raw material is how much? 80,000. Can I go to the next question? Yes, okay, very good. Next. Illustration 3 you take. See the question. What is this? Read. Left side, what is there? Finished goods valuation. Which goods valuation? Finished goods valuation. Okay. Sir, work in progress, sir. We will do it later. First, let us do finished good. Okay. First one. What is the first one? To manufacture my finished goods, I require what and what? First, see. Raw material, wages, manufacturing overheads, including depreciation of 1 rupee, administration and selling overheads, total cost per unit totally given. Okay. Please tell me, what is including 1 rupee depreciation? At the depreciation 1 rupee, and asset cost 10 rupees. What do you mean by depreciation 1 rupee? Always we use absorption costing. Enna costing? Absorption costing. What do you mean by absorption costing? Cost overheads which cannot be directly charged to the product, we will charge on a basis. Charge on a basis. Okay. What is this basis? Basis is a process in which the entire overhead cost which is not directly attributable to the goods, we will absorb to the finished product in the form of hourly basis or unit basis or something like that. I will give you 2 examples. Please listen carefully. Shall we? Yes, sir. My company is more driven by machines. My company is more driven by production process. Okay. I will give you example. Shall we? I will give you example. My company manufactures, say example, Lays packets. Lays chips. Lays packets. Do you know in the Lays packet, chips industry, etc., what will happen? Chips industry problem is unit basis you cannot charge, because unit basis there will be crores of chips that will come out. Packet basis also you can't charge because there are thousands and lakhs of packets that will get generated. Total electricity during the month 5 crore divided by 100 crore packets, 0.05 answer will come per packet electricity. Do you understand or not? At that time, absorbing the cost into the product should not be on unit basis, should be on the basis of hours basis. How many hours your machines will work throughout the month? Some hours will come. So total electricity is how much? 5 crore. Per hour how much is the cost? Then they will absorb the electricity cost to the labor hours. Second, my company manufactures, my company manufactures heavy duty machinery. Monthly 100 units will come. And more driven by electricity farm, more driven by number of units produced. Now the total electricity cost will be apportioned to the units. That's how here the unit has come. Per unit ki 1 rupee. And this is a unit driven industry. This is all you need to learn in overheads in costing. Okay. Overheads clearly they will explain. There is a concept called as absorption costing. Which concept? Absorbing means what? It will take into the product on some basis. You have some concepts like capacity, maximum capacity, okay, ideal capacity, all these things are there, na? In those areas only absorption concept, apportionment of overheads, all these things will come. Okay. Now, answer to my question. To manufacture one product, how much is a raw material required? Per unit, how much is a cost? Wages, overheads, in the depreciation, administration, selling, total cost. Very good. Finished goods holding period. What do you mean by finished goods holding period? What do you mean finished goods holding period? Cash in the form of finished goods stock is blocked for 2 months. Am I clear or not, everyone? Very good. Production per annum. How many units are estimated per annum? 60,000 units. See, calculate the stock. Last attempt this question only came. Read. Calculate the stock of, calculate the stock of finished goods in the following 3 cases. Case 1, when no information is given. Case 2, stock valuation at the cash cost. Case 3, stock valuation at the prime cost. What is the prime cost? All direct material, direct wages, direct expenses, all put together we call as a prime cost. Okay. So what are these 3? See here. Exam la question come like this. Okay. Nothing they will tell. They will tell estimate. Nothing you said. Then we will do the problem on no information basis or cash cost basis by making an assumption in the exam. But first I should explain the student as to what are the 3 ways available in the exam. No information is given how to do, cash cost la how to do, and prime cost la how to do. First see the question. Tell me, how much is the total cost blocked? How much is the total cost blocked? Loudly. Next, how much is the cost blocked in the form of cash, real cash? In that 15, 1 rupee is the depreciation, which is a real cash cost, not a real cash cost. Prime cost means you should not take 15 or 14, you should take only 9. Take only. That means bank won't give loans for payment of your rent and electricity. That means overhead they don't finance sometimes. Some banks will give, some banks policy will be there. We will finance only direct expenses, direct wages and direct material, but not your factory rent and overheads. Listening or not, everyone? So there, listening? This is a point, sir. Sir, generally whenever you buy the house, house ki loan will be given. I will make interiors, please give me loan means generally banks won't give. What generally people will do is they will take excess loan and use it for interiors. That is different. But bank generally don't entertain taking loans or giving loans only for the purpose of your interiors. Like that, interior is like an overhead here. I will give you for raw material. I will give you for your direct wages. I will give you for your direct material, direct expenses. But don't ask money for your overheads. Your electricity bill, why will I pay? Like that bank will see. Did you get the point or not? So, observation is very bad. Start from the beginning. Tell me point by point. Raw material, how much cost? Entity 5. Total raw material cost per annum is 5 rupees. Per each unit, how much raw material I need to spend? 5 rupee. Next, wages, overheads, admin and selling, total cost. First, one by one, let me ask. Finished goods holding period is how much? Shall I ask you a question now? First tell me, what is the total cost? Sir, when no information given, when stock valuation is at cash cost to prime cost, I ask. First tell me, no information given means we should do at the total cost basis a cash cost. Total cost. Tell me how to do the total cost. What is the total cost? Loudly. Wrong answer. You should consider only up to the overheads. Admin selling is not related to finished goods. It is relating to the sale. It is relating to the sale. Exact exam question. Okay? It is relating to the sale. Next one, tell me. 5 rupees what cost? This is the last and final call for all the passengers. See here. If you don't board into the class properly, you are gone. See the screen properly. What is the cost you are spending on raw material? Wages? Manufacturing overhead? That's all. Finished good is product is created after that. I am giving loan for your finished goods, not for your sale process. Clear? That means answer to my question now. Point number 1. Raw material 5, wages 4, manufacturing overhead 3. Tell me, what is the total cost incurred to make the finished product, not to sell the finished product? Answer. That is total cost. Okay. In that, how much is the cash cost? 11. Because how much is depreciation? How much is the prime cost in that? Now take calculator and solve. Start. I will ask you do. How many units are estimated? Write down. 60,000 into how much is blocked in the form of total cost? 15 into 12. Okay. Next, that will be blocked for full year 2 months. Into 2 by 12. 1 lakh? That's how you got the first answer. 1,20,000. Now do for cash cost and prime cost. If you want question, you can see. 1 lakh. Next one. Let everyone do. How much is answer? What are the 3 answers now? 1,20,000, 1,10,000. See, 1,20,000. First answer. Next one, 1 lakh. And next one? These are exam questions they are asking. That also we are unable to do, means see how much clarity we are having. Adoka bacha chapter, not of our range. We are scared about working capital. Working capital chapter. Chapter bacha chapter. First point. We make hero. They are not actually. Okay, sir. First point. First problems will be like that only, sir. Shall I show you last problems? Let us see now. What is the next one? Working capital. Working capital. Work in progress. What is WIP? Work in progress means my money is blocked in finished goods or raw material middle. And going on. Process is going on. For example, to manufacture this bench, cutting process, Fevicol, adhesives, attachments, screws, nuts, all this process will take some time or not. That time taken for between raw material and finished good, there will be a time taken. That time is called as what time? Work in progress time. That means even during that time, what are all the things that I will incur? Raw material, wages, direct expenses. Sir, 1 second. Raw material is a direct? Direct? Raw material. This wood is a direct material. Fevicol is a direct expense. Material. Early morning vibes. So, Fevicol is a direct material. You will sit on Fevicol. Fevicol is a direct material, direct expense. Direct expense, yeah. How come it become direct material? So tell me, one person is there. I am the carpenter. I am coming and doing the work. Who I am? Direct labor. Wood? Direct material. Fevicol, nuts, screws. Those are all direct expenses. Okay, na? For this, drilling everything, my wire is connected to this particular drilling wire is connected to electricity. What is this? Electricity is the overhead. Are you understanding or not? These are all various expenses that you have to incur. Don't make me to teach costing. Yeah, I stopped it long back. So, the point what I wanted to tell is a very simple concept. Money blockage, if you understand, working capital of first unit completed. Okay, but we will do all the 9 problems in this. See there. Work in progress holding period. How many months? What do you mean half month? 15 days and a 0.5 months. 0.5 month and 15 days and 0.5 month. What will happen? My money will be blocked in the form of work in progress. Until it is not in finished good, it is not even in raw material format. My money is blocked somewhere in the middle. For how many days? I want finance also for that. Okay. See that. Case 1. In questions in exam can come in 3 ways again. Case 1. Work in progress is 60% complete. He will tell like that. Work in progress is 60% complete. process costing you got this. What you will do? Work in progress is 60% complete, he said. Means all the items inside the work in progress are completed by how much percent? Wrong answer. Raw material will be 100 always. అంటే ప్రాసెస్ కాస్టింగ్ ఇలా. సో పాయింట్ ఈస్ వర్కింగ్ ప్రోగ్రెస్ ఈస్ కంప్లీట్ బై హౌ మచ్ పర్సెంట్? మీన్స్ raw material is assumed to be completed by how much percent? 100%. Labor 60%, overhead 60% we will take. Listening? Next, second question. Hey, see that. Third question. Third case you see? Third case you see? No information given. Raw material 100%. Process costing raw material 100%. Labor overhead assumed to be completed by 50% each. How much percent? 50 and 50. Next, read. Case 2. Work in progress is 80% complete as to the materials, 60% complete as to the wages. Actually, wages and overhead. What do you mean by that? How to read? How to read? Now materials is not assumed as 100% complete. Materials are assumed to be 80% complete. Wages and overhead are assumed to be 60% complete. Everyone understood the point? Everyone in the class? Will you do now? Rough paper lo somewhere you do. Solve as per total cost model, cash cost model with the same information. On a rough paper you do. No doubt. What should I do? I will help you. Work in progress. Work in progress. Okay. First I will ask question one by one slowly. First understand and answer. Okay. No avesam. Very easy concept. First tell me what is our case 1. Same information sir. Question is same. I am asking work in progress now. What is the case 1? ఏంటి 60%? Work in progress is complete by how much percent? Write down. Work in progress complete by 60%. Underline that. I will ask question, answer and then do. Okay. Now tell me work in progress. First question 1. Raw material will be there in work in progress or not? Wages will be there in work in progress or not? Manufacturing overhead will be there in work in progress or not? Admin and selling overheads will be there in work in progress or not? When admin and selling will come? After finished good is manufactured. Work in progress ki no one will do publicity. Are you understanding or not? Work in progress ki no one will do publicity. Okay na? Sir, did you understand what I said? Sir, if the product is prepared, labeling, everything is done, I will do nice publicity, photo shoot, everything for the product and I will release as an advertisement. During manufacturing process, if you show people, they don't buy. How they make sweets, so people will put on Instagram, na? Nice videos they will put. The ambience, all these things, if they show when they are making the food, gone. That's why we should not see. Especially Pani Puri batch. A Pavitra Padardham is there. Okay? That particular thing will be there. One Puri will be there. He will break it with his finger. Tap, 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 tap. 5 days before water he will take. Then, if you see the process, work in progress, your progress is gone. So, that's why people won't give any importance to work in progress. People should not see. Either see the raw material, you like it. Either see the finished good, you will like it. But don't see it somewhere in the middle. So, now the point is very clear. See there and tell, we do advertisement, selling, everything for finished product. Work in progress. Loudly. Okay, na? Now I ask you, please listen. Fun part, listen carefully. 60% complete as to what? Material is completed by? And I want loan for raw material, wages, overheads, all the 3. But in that, 100% block is only for? Calculate. How many units? Into how much? Into how much per unit? You don't get doubts because of others. First point. Again, take in calculator. How many units? 60,000 units. How much is the cost per raw material? Into how many months my raw material will be blocked in working progress format? 0.5 by 12. How much? 12,000? What is 12,500? What is 12,500? Raw material blocked in raw material form, raw material blocked in work in progress form. Work in progress form. So now tell me, you should ask loan for complete raw material, work in progress only 12,500. How much you got? 12,000 or 12,500? 12,500. That's the first one. Tell me. Second, that is point number 1. Point number 2, wages. Tell me, wages are completed by how much percent? Loudly? Write down. 60,000 into 4. Don't copy. Did you understand what I am telling? 60,000 into 4. What is 4? Wages per unit. But 100% completed, only 60%. Into 0.6 into 0.5 by 12. Write down. Next, overheads. Total cost basis we will do. Overheads. Tell me. Don't see my face here. Start doing 60,000 into 3. Cash cost if you do, take only 2. 60,000 into 3 into 0.6, 60% complete. Into 0.6 into 0.5 by 12. 4,000. Now total all of them. How much? Total how much? 20? See the screen. Check whether the answer is right or not. How much you said? 20? 3,000. Wait. How much? Where have you given? 23. See here. First answer. This one. Have you got this answer or not, everyone in the class? Will you do for... Sir, what type we have done now? We have done on total cost or cash cost? Everyone? Will you do on cash cost and tell me the answer? Do and tell. 1 minute time. Raw material answer will change or will not change? Will not change. Wages answer will change or will not change? Will not change. What only will change? Overhead say 1 rupee you have to reduce. 21,000? See the answer? 21,000. Sorry, I got 20,500. How much is answer? 20,500? Very good. Sir. Yes, you have to take 100%. You have done it? No, you have to take 80%. If you take 80% as complete, that answer will come. First one, tell me. One second. Listen. Array, listen. Have you done the cash cost basis, everyone? Which basis? Cash cost. First one, total cost basis. Next one, you have done using the... This is a cash cost answer. Okay, na? 80% complete, I didn't even ask you to do now. As of now, what we have done? 60% complete ki total cost, 50% complete ki cash cost, 60% complete cash cost we have done. Now we have to do for what? 80% to the raw material completion, 60% to the labor overhead. Write down, keep the heading. 80% completion to raw material, this is a question. 60% of the wages. Or else you do one thing, every question, 2 columns you open, total cost to cash cost, there itself you can do. Maybe that is more easy for you. Solve and tell me, don't sit idle. Completed everyone? Tell me, 80% as to 80% as to the material, 60% as to the wages overhead. On the basis of total cost, how much is answer? 20,500. Have you got this answer? If it is on a cash cost basis? 19,000. Have you got the answer or not? Last one also do. What is the case 3? No information is given. No information is given. What do you mean no information given? Nothing is said. Then what you should take? Raw material 100% complete. Labor overheads will be 50% complete. Do it for total cost and cash cost both. Okay, well, completed everyone? Everyone completed? Tell me now, how much is the answer for no information given under the total cost? 21,250. There? 21,250. Have you got the answer? What is the next one? 20,000. That's all. Now tell me, the chapter difficult? Sir, this chapter is very easy. Actually, our fear makes it more difficult. The chapter, if you understand properly, and moreover, shall I ask you one question now? We have done raw material, we have done labor, we have done raw material, we have done finished goods, we have done work in progress. Correct? See and tell me there, how much is the loan you are asking on raw material? First case. Raw material, how much you are, sir, in all the cases, raw material is same or not? The total cost or non-total cost, except 80% case, in all other cases, raw material is same or not? Yes, how much you are asking loan on raw material? 12,500. Everyone? 12,500. Wrong. Finished goods also you are asking raw material. You are asking stock of raw material loan. Totally it will be somewhere around 50,000-60,000 you are asking on raw material, broken into 3 stages. Stock in the stock of raw material some amount, stock in the form of work in progress 12,000, finished goods you open the finished goods concept. You have done already finished goods. You didn't do? I have shown you the question. Sir, tell me, finished goods, if you see this, this one, tell me, finished goods, if you go by a total cost basis, you tell me, raw material how much is per unit? 5. Everyone? 5 into 60,000 into 2 by 12. How much? 50. 50,000. 50,000 for what? Raw material in the form of finished goods you are asking. 12,500 in work in progress format, in form of work in progress. And 5 rupees if it is idle for another 2 months in the form of raw material, another 50,000 you will ask. And totally how much you are asking on raw material? 50,000 plus 50,000 plus 12,500. Total how much you are asking? That 1,12,000 is the total loan you are taking for the blockage of your cash in the form of into how many stages? That's what the operating cycle meant to be. If you reduce that cycle, automatically loan also will come down. Understood or not? Okay. Let us take another question and try to solve. Okay. See here. This is the next one. Debtors valuation. Enna valuation, sir? Debtors valuation. See the question. Assume the same facts of question 3. Same facts of question 3. See there. Debt collection period, how many months? Sir, whenever debtors are there, money is saved, money blocked. Money? Why? Why? Again I am asking, listen carefully. Raw material or finished goods in the stock form. Everyone, finished goods in the finished goods in the form of debtors. Do you know how to see the finished goods? See here. Stock, finished goods stock is a stock in the go down. Finished goods stock is a stock in the go down. Debtors, stock with the customers, because money did not come in both the cases. I kept stock in the go down. I kept stock in your hand. Whether your hand or go down, first stock is in the form of stock only. Because what didn't come at? Cash didn't come, money didn't come back. So, therefore, debtors is also a damage to the company. Okay? So, therefore, what they are asking, see there, how much money is blocked in the form of debtors? See there, debt collection period means how much? What do you mean by 2 months debt collection period? If you sell today, this money will be paid by the debtor after how many months? Until your money is blocked for? 2 months. That's the point. For 2 months I want the finance. For how many months? 2 months. Loudly? 2 months. Now tell me, what is the total cost in this particular case? What is the total cost in this particular case? Everyone. Cash cost, total cost. 15. Because debtors time ki sale also completed. What also completed? Sale. Loudly? Sale also completed. So sale value is how much? Sale value, I mean cost of sales is how much? 15. I will give loan up to 15 to you. Because by the time debtors are created, sale is happening. Before sale, already admin overheads also you might have incurred. Are you understanding? Will you do or not? I want on total cost to cash cost. 2 months is the collection period for debtors. Start. How many units? Percentage of completion. I didn't understand. I didn't understand. What question you are asking? Oh, you are asking how much is a cash sale. Cash sale is how much percent here? 20%. Credit sale? 80%. Take 80% and do. See, this is the basic information put for you. Tell me now. This is the info. 1 lakh? First, total cost or cash cost? How much? 15 into 60,000 into 80% into 2 by 12. 1 lakh? Everyone got this answer? Next, if you have to do the same on cash cost, not 15, sorry, how much? 14 into 80% into 2 by 12. Okay? Everyone got the answer? Yes, sir. Listen. But the point is, you may ask in exam in 3 ways. Total cost, cash cost, total sales. Total sales means profit also should be added. What also should be added? Profit. But that is not a wise way of asking the question. Institute rarely asks that question, but asked 1 or 2 times. It's a foolishness. Bank finances your raw material. Bank finances your wages, overhead. Bank finances your admin. Bank don't finance depreciation. Therefore, cash cost is correct way. But still, okay, bank also finances depreciation, let us take. But bank can't finance your profit, yeah. I want loan for my profit. Did you understand the point or not? I want Loan for the profit. But the ideology, shall I tell you why that concept came? Sir, tell me 1 second. Debtors hands life, the stock is there. It is a purchase or sale? Answer. That my entire production cost, whatever I incurred, is still blocked in the form of whom? Along with that, my profit is also blocked in your hand. That's why we will ask loan also on the profit. Did you understand or not? Tell me, when I sell to the debtors, I will sell them at purchase price or sale price? And in that sale price, what also is there? 15 rupees cost is there, 5 rupee profit is also there. That means I am postponing 15 or 5 or both. Therefore, I will ask loan also on my profit I am losing. Do you understand? But generally banks don't give. For problematic part, okay. Realistically, it is not there. Shall we do also that? That also, if you do, all kinds of questions will be completed. See here once. See here once. What is the selling price? What is selling price? Now tell me, if it is on total cost basis, how much loan you should ask? I mean, selling price basis, sales approach. Don't sit idle. Exam also same will repeat. How much? Why 1,60,000? How many units are there totally? 60,000. Into how much per unit? 20 rupees. Into how many months? 2 by 12. How much? And 80%. How much? That's all. These are the two answers. Everyone understood the point or not? Sales approach lo 1,60,000. Total cost lo 1,20,000. Cash cost lo 1,12,000. Had we got all the three answers or not? Very good. That's all. This is the answer. Now, do for the creditors. Do for the creditors. Sir, whenever I say creditors, listen first. One point I have to tell. Hello. 1 minute, listen. After this, we will do 3 big problems given for 8 marks and 10 marks. At that time, you do. See the screen once. Credit sales are made. Sir, credit purchases are made. What purchases? Credit. Creditors will be of 2 types. Goods creditors, other creditors. First one? Other creditors. Sir, wages ke creditors will be there. Wages ki creditors, goods creditors will be there. Wages ki creditors will be there. Wages don't have creditors. Wages have time lag. Wages have? Shall I tell you how time lag will work? Listen carefully. Classic example I will tell you. You are an employee working in Indian Railway. Employee working in? Indian Railway. Let us say, for example, you join Indian Railway today. Today when you join, they will pay salary after 1 month. And the first they are getting their work done. After that they are paying. Means there is a time lag of that creditor. That means first production is getting completed. Next they are making payment. That means they are getting a time of how many months? 1 full month to make the payment from you. For you. Understood the point clearly? So therefore, see there. Assume the same facts as question 3. You know the question 3 now, very popular question. Credit period how many months? Credit purchase, cash purchases. And which credit purchases is how much percent? 80%. Time lag for payment of expenses, how many months? Calculate the creditors for raw material and other expenses he is asking. Did you understand the question or not? Loudly. First one, tell me. This is the amount to be financed by the bank to us. Correct? Wrong. This much amount bank will not give you. Do you know why? Creditors is an advantage to you. Creditor means you will make the payment, we will lag the payment. That means you are really paying to that extent of raw material or not paying. Then why should I give you loan on that? In our example, one second. Can you calculate the raw material and tell me how much it is? He is asking creditors for raw material and creditors for other expenses or not. Last example, how many units are there totally? Take calculator, 60,000 into 5 into how many months? Into how much percent? 80%. Into 2 by 12. How much? Loudly? In our old example, 50,000 raw material plus 50,000 raw material plus 12,500 minus 40,000 only they will give as a loan. Do you understand the point or not? That means they will give only 82,500 as a loan to you. They will not give total 1,12,000 because 40,000 you are getting a benefit now. Therefore they don't give that loan. So technically for the raw material how much loan they will give? 72,500 they will give. Sorry, not 82,000. Sorry, 72,500 only they will give as a loan. Did you now understand how to understand this concept? Okay. Now tell me, what is the time lag for expenses? 1 second, tell me. 1 second, tell me. Wages will have a time lag or not? Wages will have a time lag or not? In our old example, how much is the wages? 4. How many units? Write down. 60,000. Note down in the calculator. 60,000 into 4 into 80%. 80% is only on the cash purchase, credit purchase. That will be directly taken into how many months? 1 by 12. How much? What is the 20,000? Please explain me. That 20,000 is the amount blocked for the particular company. That means that much amount we will not get financer. We will get the financer. Will not get the finance for that 20,000. Did you understand or not, everyone? Okay. Now take the next question. This question directly I will put it on the screen. You people will do now. If you can do this exam question, you will do. If you can't do, fat. 10 marks, 8 marks question will come exactly like this in exam with a change in numbers. Don't write question. Telegram group already question is there. Now don't waste time. I want every one of you to sit in the class, do the answer. Start. Read the question first. Raw material. First, what is the production? 60 lakhs. Next, raw material cost per unit. 10 direct wages, overheads, including depreciation, 0.25 per unit. And absorption is on hourly basis or unit basis? Unit basis. Total cost to profit to selling price. I think you understood the entire cost sheet. Next, company holds 2 months of raw material stock, half months work in progress, finished good for 1 month. Creditors material ki 1 month, debtors ki 2 months credit, minimum cash balance 25,000, forecast the working capital requirement. 8 marks question given in exam. Start doing it. Whenever question was not saying anything, you should do on both total cost and cash cost. They said anything, total cost or cash cost, both you have to do. Generally you can take assumptions, but risky with the institute. I have done in one model only in the notes, but you do in both the sides. It takes hardly another half minute time, that's all. Work in progress when you are doing, how much you are taking? When no information given, I told you, na, if they tell, then you will take 60% like that. Or else, when no information is given, what you have to take? 100% complete of raw material, 50% complete to the wages and overheads. Have you done, everyone? Debtors? 100% great sales. Nothing is said, 100% great sales. First point, tell me, did you all understand the question? Whatever we have done till now, it's a combined question of all the items in one single question. Shall I show the answer? How many of you have completed? Not even one. Do it fast. So people over the Zoom live also, please give a reply. Have you completed? Please put the answer if you have completed, those who have completed from the Zoom live. Why comments option was not given to them? 1 minute, 1 minute. Now try to put a message. Yes, now working. I think they disabled it. Huh? Uh-huh. Have you done for both the total cost and cash cost? I will show the answer. Whatever answer you get to that 25,000 cash also you add. Whatever answer you got 30 lakhs na plus 25,000. That means along with all these we also want some cash balance. Raw material is raw material in the cash form, cash in raw material form, cash in work in progress form, cash in finished goods form, cash in debtors form, cash in cash form. That also we want. Shall I show the answer? Okay. See here. So time up. You have taken 10 minutes time almost. See the screen. See the screen. One by one I will show you. Check and tell whether you did correct or not. First, I am first showing for total cost. Work in raw material 10 lakh rupees. 10 lakh rupees. Check your answers. Work in progress 25,000. Work in progress 3,75,000 totally. Very good. Finished goods 10 lakhs. Debtors 25 lakhs. Total cost basis. Huh? With profit you take. You have taken only at cost. Do at profit. Debtors, nothing is said. I forgot to tell. I'm very sorry. In exam, debtors calculation they ask you. Listening. They don't tell anything in the question. Do with profit. I think you have done without profit calculation. Do with profit. I forgot to tell you the assumption. $25 lakhs. Have you got the answer? Normally, how much is the answer without profit? 20 lakhs. With profit will be 25 lakhs. Okay, you got the answer. Creditors, you tell me. Creditors ki time period is given or not given? Given. So how much totally? So total working capital requirement will be 44 lakhs. How many of you got this answer 44 lakh? Very good. How many of you did not get 44 lakh? If there is any problem, I will let me know. Why you did get 44? 20 lakhs as what? No problem, yeah. 39 lakhs you will get. Correct. If you take profit inclusive, you will get 44. If you don't take, you will get 39 lakhs. How many of you got 39 lakhs? 39. According to your assumption, that is 100% right. So none of these two answers, how many have got? Other than 39, other than 44. Let us check also the Zoom students, to what extent they followed. Zoom students, how much answer you got? 44 lakh. Okay. Sir, can you do for cash cost? Have you done for cash cost? Yes, everyone, have you done for cash cost? Yes, shall we see the answers also for the cash cost? Yes, this much you have to get. Just we made some small adjustments directly. 38 lakh 59,375. Means non-cash I removed from them. You can see there. Whenever depreciation work in progress, depreciation finished good, depreciation in debtors, and we also reduce the profits. Because cash cost itself means only cost should be taken. What should not be considered? Profit should not be considered, therefore removed. Which cost basis? Cash cost. When I use cash cost, it is using only cost. Profit is a cost, profit is an income. Therefore, we will also reduce that. Sorry, one thing, listen carefully. Everyone, sir, did right or did wrong, it will happen. Small mistakes will happen. Practice at home. At least everyone in the class understood the concept clearly or not? Anyone, if you can tell where you did the mistake, I can tell where to rectify. How many of you got the wrong answer? I mean, other than 44, other than 39. Everyone got the answer? Yes. Where you did the wrong? Ah, 25? Okay, you included profit and taken. You should not. Sir, did you understand the second point what I said? Whenever you take cash cost basis, name lone what is there? Cost. Name lone what is there? Cost. So what should not be taken? Profits should not be considered in calculating the debtors. Clear or not, everyone? Okay, that's the point. Again, anyone else who didn't get 44 or 39? Everyone at least understood? This illustration, a 12 marks question that came in exam. Read the question. Clearly, they only given in the question that it is done on which basis? Cash cost basis. So problem will not arise in this question. But tell me, company is which company? X Limited. What is the gross profit margin? Next, depreciation is a part of cost of production. Next, safety margin 15%, means extra cash we will ask at the last. Next one, cash 50% of the current liabilities. No work in progress stock. Stock of raw material and finished goods holding period is 1 month. Other information, particulars. Sales is having a 2 months credit 27 lakh. Total sales 27 lakh, 2 months credit. Okay, next continue. Materials consumed 6 lakh 75, 2 months is in credit. Next. Wages is total 4,50,000 paid first off next month. That time lag is 1 month. Just now I told you. Next, manufacturing expenses payable at the end of the year. How much? 60,000. End of the year you will pay 60,000. These are paid in 1 month arrears. Next, admin expenses paid as above. Paid as above 1,80,000. Sales and promotion paid 90,000 quarterly and in advance. This is all the information that was given. It's a 12 marks question that came in examination from the working capital estimates. This question we will do together. I am not asking you to do this. Okay, you will get paralysis if you do. So don't do. This is the worst way in which a question can come in examination for 12 marks. Okay. Generally questions will come in the last question format or in the previous question format for 6 marks and 8 marks. Originally, previously, when FM paper used to be 100 marks paper, then 12 marks questions used to come like this. Listening. But if you do questions like this, toughest question possible, any question that come in examination, you will be able to solve. Okay. Let us start doing this. The time allocated for this question is 20 minutes. Okay. Read the question one last time. We both will start doing the answer together. Read the question properly. Sir, please read the question. Don't waste time, please. Okay? Now, see here. Please listen. First thing you tell me, we are going to do this entire question on total cost basis or cash cost basis. Because it was clearly mentioned in the question that we should use only the cash cost basis. Okay, na? Let us do together. First one by one, step by step, let us do. Write down. Number 1. Tell me. Tell and write. First, what is the cycle? Working capital cycle starts with which one? Debtors directly or raw material? Raw material. Write down. Raw material. You tell me, I will do. After that, you copy. Okay. So I have given 20 minutes to 30 minutes in the class. Exam, you should complete this in 15 minutes. Okay. So here, double the time we will take. 30 minutes we will take. With this, all the questions in this particular chapter will be done. Before going into that, first tell me, raw material. How much raw material we are consuming? First tell me. 6 lakh? 6,75,000 is for 1 month or for 1 year? Everyone? How many months it is in holding? Wrong. At the credit period. Calculation of creditors that will be useful. Stock of raw material and finished goods is held only for 1 month. Yeah, read the question properly, I said. Okay. Tell me now. Sorry. Raw material. Tell the value. 6,75,000 into 1 by 12. 60? Write down. 56,250. Okay. Now tell me. Number 2. Raw material after what will be there? How much is the work in progress? No work in progress. Right on. Number 3. Very, very important. 4 marks or 5 marks they will give for this adjustment itself. Reason I will tell you why. See there. Look at the scenario. They didn't give the question in the way in which we have done till now. Variety type they ask the question. Sales given, materials given, wages given, manufacturing expenses given, admin expenses given, sales and promotional expenses also given. Okay. Now I ask you one question, first answer. Sales is how much? Answer, sir. 27 lakhs is the sales. Okay. We are now asked to calculate the finished goods. Okay. See the question and tell. Materials will go into the finished goods. Materials will go into the finished goods. Wages will go into finished goods. Manufacturing expenses will go into the finished goods. Administration overheads, sales promotion overheads will be taken or will not be? Loudly. This is the point. Okay, na? Now first answer to my question. How much is the sales? How much? How much is the finished goods cost? Finished goods cost. I am asking very clearly in English. What is the cost of finished goods? Sales value I am not asking. How will you calculate that? 6,75,000 plus 5,40,000 plus 60,000. But the point you have to understand is the 60,000 is for 1 month. Okay. So manufacturing expenses payable is 60,000. Paid or payable? Ante payable ante yet to be paid or already paid? Yet to be paid is 60,000. That means 1 month ki 60,000 is pending. So total expenses will be 60,000 into 12. Did you understand the point or not? How much is the total? Start again. Manufacturing expenses are paid at the end or payable at the end? Ante arrears are yet to be paid or already paid? That yet to be paid is how much? 60,000. That is for how many months? 1 month. 1 month is 60,000 means total wages for 12 months will be how much? Understood the point or not? How much is 7 lakh? 7 lakh? That's the point. Okay, na? Tell me what is the total cost of finished goods? 19 lakh? Loudly, 19 lakh? Can we take the 19 lakh 35,000 or not? You cannot, because depreciation is there in that. How to calculate? Because he is asking us to calculate on total cost or cash cost. What should come out? But how to calculate? That's why this problem came for 12 marks in exam. Okay, we have to divide. Shall we? Easy way only, just some application. First tell me. Please don't write, I will write first. Sales how much? Please help me. Sales how much? Two branches. Cost of sales, gross profit. Gross profit margin is how much percent? And that will be on the sales. Margin is always on the sales. Tell me, 27 lakh into 20%. Everyone? What is the balance? 21 lakh? What is 21 lakh 60,000? Cost of sales or cost of goods sold also you can write, okay? Next, I will divide this into three parts now. What are the three parts in this cost? What are the costs involved? Raw material, wages, overheads. Raw material, wages, overheads. Which overheads? Manufacturing overheads. Okay. Now, raw material. Their question given everyone. How much? 6 lakh 75,000. Wages 5 lakh 40,000. Balancing figure will become the manufacturing overheads, or technically you can do like this. Manufacturing overheads is how much? 7 lakh 20,000. Okay. In this manufacturing overheads, what is also included? Everyone? Two branches will be there. Cash manufacturing overheads, depreciation. Okay. Tell me, what is the cash manufacturing overheads? That question, listen carefully. Up to here, everyone understood the workings clearly. Yeah? Sir, one second, please. Listen carefully. First one, how much is the sale? Listen, yeah, how much is the sale? 27 lakhs. How many parts are there? Two parts. Number one, cost of sales or cost of goods sold. Next one, gross. Rather than using it as a cost of goods sold, I can call it as a manufacturing cost. Which cost? Manufacturing cost. How much is the manufacturing cost? 21 lakh 60. How many manufacturing costs are there? Raw material, wages and manufacturing overhead. Now you will get a doubt. I know what is running in your mind also. I know. If at all you apply some. Shall I tell you what doubt you may get? Sir, you didn't take 1,80,000 and 90,000. This also you shouldn't take, sir. What is this, sir? Yanna, sir. Wrong, sir. Avesam illa, sir. First point, shall I tell you? Those all are paid out of gross profit. Are you understanding what I said? What is the sale? Do you know P&L, trading P&L? This is trading account. P&L account, all those expenses will come. P&L account expenses will be paid out of gross profit or net profit. From that 5 lakh 40 we will pay all these 1 lakh 80, 90,000, all these. Did you know, understand the point or not? How many of you got this doubt? So this doubt, why these two expenses are missing? Did you understand what is my answer? I repeat one more time. Maybe you may get a doubt. Maybe today you may not get a doubt. At least at the time you do at home, the doubt will come. At that time you will think, why? Why? Out of the bouncers are coming. Sales is how much? Please see there, let us complete. Sales is how much? In that, what is the gross profit? From that 5 lakh 40,000, what expenses you have to pay? Administration, selling expense, all this comes out of gross profit. P&L, trading P&L, you know na? Trading P&L, trading account, what will come? Gross profit will come. Trading P&L, what will come? Opening closing stock, you forget. What will come? Purchases, sales, direct expenses, all the, those are all the things. 21 lakh 60. Salaries, sales expenses, other indirect expenses, you will be paid in trading account or P&L account. Therefore, 5 lakh 40 will pay all those. Are you understanding the point or not? This is net profit or gross profit? Net profit or gross profit? From there we will pay all those. Okay na? See the screen. How much is the sales? What is the 80%? What is 80%? Manufacturing cost. That value is how much? Gross profit how much? Manufacturing cost is broken into how many parts? 3 parts. Number 1, raw material. Number 2, wages. Number 2, manufacturing overheads. Up to here everyone understood? Answer? Yes, sir. See the screen once. See the screen once. Depreciation amount was given. They said that depreciation is a forming part of the cost of production. Forming part of the cost of production. Okay. Now I will ask you one question, first answer. So up to here everyone understood clearly? Copy down up to here. Last part I will tell, after that you write down. Working is required. Once you do that you will get a clarity. I know, yeah. Copy down. I know. You are telling manufacturing overhead 5 lakh for, I know. Just I have written like this. Just we have to add another value. Sorry, for your satisfaction, copy down up to here. That's why I said balancing figure, if you remember. But just I have written 7 lakh 20 for your understanding. In that 7 lakh 20 is the manufacturing overhead. Written up to here. Sales 27 lakh, manufacturing cost 21 lakh 60, gross profit 5 lakh 40. In the 21 lakh 60,000, raw material is 6 lakh 75, wages is 5 lakh 40,000. Okay. Tell me now, what is the, up to here copied, what is the balancing figure here? 9 lakh 45,000. In this, they have given 2 branches, right? Down along with me now. In this, they have given 2 branches. What are the 2 branches they have given? Cash, cost of production, and next one is the depreciation. Cash cost of production, you tell me how much it is? 7 lakh 20,000, balancing figure. 2 lakh? That's all. This is a calculation. Bro. Dedicated to you. I just written 7 lakh 20 to understand that there is a cost already given. Balance will be the depreciation part. For that I have written. Sir, okay, no problem. Understood the concept up to here clearly? So how much is the depreciation value? 2 lakh 25. Sir, first this is the only important adjustment and complicated adjustment. Remaining everything is dead simple in this chapter, in this area. Please see the question now. What are all the 3 things we calculated? What are all the 3 things we calculated? Raw material. How much is raw material? 56,250. Work in progress there or not there? Not there. Finished goods. Finished goods, how much totally? Tell me, when you ask money from the bank for finished goods, we are doing on total cost or cash cost? Means for what we should not ask the finance? So we should ask only for what? 27 lakhs you can't ask, because in that profit of 4 lakh, 5 lakh 40 is there. Sir, 21 lakh 60,000 can we ask? No, because in the depreciation is there. So 21 lakh 60,000 minus 2 lakh 25,000 you have to take. 19 lakh? This is for 1 month or 1 year. Finished goods will be in the stock for 1 month. 1 lakh 61,000. 250 na? See here. Low. Aves see here. How much is answer? 1 lakh 61,250. Like this we have to do. So everyone understood concept clearly, yeah? So we have to take cash cost or total cost. Depreciation will be taken or will not be taken? Gross profit is a cost or profit? That also you have doubt. Gross profit is a profit or cost? Therefore on that they will not give you finance. Second one, depreciation is a real cost or not a real cost? On that also they will not give you the money. They will give money only to the extent of the real cost that you are incurring in the production process. That amount is coming to how much? 19 lakh 35,000. That for 1 month will be 1 lakh 61,250. Everyone understood up to here clearly, yeah? Remaining things I don't want to ask you to do. Just let us see the screen. Let us see the answers and we'll go to the next part. Okay? From here, everything is same. Same represents whatever we have done in the previous part. Tell me, how many we completed? Raw material completed. Work in progress completed. Anyway, not given. Third one, over. Next one, what will come? Debtors, creditors, cash. Tell me, what are those? Debtors, creditors, cash. Creditors, when you do, two types of creditors are there. Raw material creditors, time lag of creditors. Listening or not? See, let's do directly. Don't even do, just see the answer. Tell me, we are doing debtors on cash cost or total cost? Means profit to be included, not to be. Loudly? But admin and selling overheads will be included, will not be. Therefore, we added that, we calculated. I'm talking to you, everyone. Next. How much I prepaid? Some people are now seeing, oh, prepaid is there in the question. Sales promotion paid in advance. Okay. Sales promotion paid. Sales promotion paid. How much I paid? 90. In that, how much I paid in advance? Quarterly I paid. And per annum, how much it is? Per annum, how much it is? So I paid. In that, advance is also there. How much advance I paid? 3 months advance money also I paid. See here. Working, I will show you. See. Prepaid expense. How much I paid in advance? 22,500. Do you know what do you mean by that? 90,000 minus 22,500. Calculate. That much is the per annum ones. But I paid 22,500 in advance. Okay. Creditors for goods. Sir, when I say creditors for goods, we should take the finished goods or raw material. How many months of credit is given for raw material? 2 months. So 6,75,000 into 2 months. Up to here, understood the point clearly or not? Yes, answer everyone. Okay. So now answer my question clearly. Hey, listen. So the point is, what is the most important adjustment in this entire question? What is the most important adjustment in this entire question? Depreciation is the only important adjustment, that too calculation of the finished goods stock. Okay, that's all. After that, raw material, wages, overhead, all these you need to write in a list, calculate them. And how much is the safety margin he is asking in the question? Whatever you get as an answer, see here, whatever you get an answer, working capital, for that what we need to add? Safety margin of 15% you should add and calculate the total working capital requirement. Everyone understood the concept up to here clearly? With this, the total concept of the working capital estimates has been completed. But time period calculation we didn't do. Up to here what we have done? Value estimates we have calculated. Now what we have to do? Operating cycle we have to do. Okay, this time I am expecting operating cycle only to come. See there once. See there. First, what is this? First Gandhi Tata. With Gandhi Tata, let us start. First, what is there? Cash. Answer. Cash. What happened to cash? And my cash is blocked in raw material for how many days? My money is blocked in for how many days? Work in progress, how many process we are doing? 3 process we are doing. Completed. It became what? My cash is blocked in finished goods for how many days? Finished goods are checked, quality control, everything said. Okay. Available for sale. It became what? Debtors. Blocked for how many days? Again debtors. Became what? Cash. Now tell me, this all period of is called as what? This is called as the working capital cycle. Are you understanding the point or not? This is how it will be calculated. Okay. This formula, how you remember, I don't know. You have to remember. Okay. I'm putting it on the screen. Please see here. How you remember is none of my business. You have to remember. If you don't remember, 6 marks of FAT. Okay? See there. What is the question that was asked? What cycle? Operating cycle or net operating cycle. Okay? These are all the formula. You can remember that once you put some effort after going home. But the point is, how to do that is a question. This is how the questions are being tested on operating cycle. See here, I will show you the question first. 1 second. Read. What is the question? From the following data, you can see our RTP, MTP. Sir, 1 second. We have done working capital estimates chapter, correct? You take any question from study material, any question from RTP, MTP, you will be able to solve. Beyond this, questions will never come in exam. Never. Because beyond this, there is no concept to ask. If he has to ask, he has to ask the question from any of these concepts. There is no concept of asking beyond what we discussed in the class today. Listening? In this only small adjustments they can make and they can ask the question. Beyond this mode also there is no change. See there. 2 years question was given. From the following data, compute the operating cycle and comment on the increase or decrease. Comments okay. Lastly, you can just read. Stock of raw material. Year 1, how much it is? Year 2? Next. Stock of work in progress, stock of finished goods, purchases, cost of goods, sales, debtors, creditors. All these are given. Consider how many days in a year? 360 days in a year. What he is asking us to compute? The beginning line you read here, please. What you have to do? Operating cycle period. And how many days your total money has been blocked. Okay? Days I want. One by one I will show you. See there. So first thing, always numerator what is there? Numerator what is there? Which stock? Answer? Opening stock or closing stock? Adi raw material stock. Answer? No. Year 1 ki 0 year information they didn't give you. Therefore year 1 ki will take the closing stock given there. Year 2 ki year 1 closing becomes the opening there. Babu Chitti. Listen, exams are very near. Please. Question directly it may come. At that time if you could not do na, tears will not come, blood day. Direct. Class like he said, I didn't listen. This will blame you for next 4 or 5 months. Please do that properly. So the question is, I am having at least some amount of sixth sense to guess what kind of questions might come. These kind of questions were asked long back, not tested. So chance is there. Next immediate attempt September, they can ask a question from this. Chance. Okay na? Normally in our study material, this question is not there, nowhere. You can check the study material also. From some RTP I have written this. Question comes in examiner, direct same ditto they will copy paste with change in numbers. Isn't it? So please be very careful with this calculation. Just a formula you remember. Tell me the point. We are doing for 1 year or 2 years. 2 years. Year 1, year 2. For 2 years we are doing. Year 1 when you do, year 0 information available or not available? Therefore you can't calculate average for year 1. But you can calculate average for year 2. Why? Can you tell the average stock for year 2? You need not 24, 27. So 20 plus 27, how much it is? 47 divided by 2 you take 23.5. Have you got the answer? How much 23 point? What is the 23.5? Everyone? That's all. You can calculate that way. First year you can't calculate average because, reason? There is no opening stock for the first year. If the 0 year information is also given, then you have to calculate average only in the numerator. Listening everyone? Okay, first. What is the raw material holding period? Tell me. Raw material stock by raw material consumption. What is the raw material stock? 20. What is the raw material consumption? See here, purchases. How much is a purchase? When nothing is said, purchases will be taken as the consumption. Purchase will be taken as? Loudly? Purchase will be taken as? So tell me, second year what is the consumption? Second year what is the consumption? Wrong answer. Opening stock, closing stock adjustment you have to do. I know what you will tell. Listen again. One second. Look here. One second. See the screen. First year what is the consumption? First year, what is the consumption? Answer? Second year consumption 135. Mental అనుకుంటాడు. Second year opening stock, closing stock information is available or not? Costing, tell me what is the consumption formula? Minus closing stock. Tell the answer. 128. That will be the consumption. Numerator what you should take? Stock, average stock. Denominator raw material consumption you should take, not purchases. Raw material consumption. What is the consumption of raw material formula? Opening stock plus purchases minus closing stock. See here. This is the answer for year 1 year 2. Next what we need to do? Year 2. See here. Did you understand the answer or not, everyone? Next question. What is the second one? Stock of? Tell me. What is the work in progress stock for the 0E, or the first year? 14 divided by cost of production. See here. Cost of goods sold will be assumed to be what? Cost of production. Now tell me. Cost of production will be given. Finished goods stock should be adjusted to that. What should be adjusted? Tell me, what is the finished goods stock? 21, 24. Second year you calculate 180. This should be the answer. See here. See here. Just for your calculation I have given. Cost of production plus opening stock minus closing stock will be equal to cost of goods sold. Already what they have given in the question? Cost of goods sold they have given. Opening stock, closing stock also given. So cost of production is the balancing figure. How much is answer? 183. This is all for the first year or second year? Answer. So no problem in case of first year. Problem will come only in case of second year. That's all. Remaining all the concepts are same. Just apply the formula, apply the numbers and calculate the answers. Understood how to do this? You will get the timing. See the screen? You will get the timing. 75 days, 36 days, 54 days, 72 days, 60 days. Tell me. 75 raw material, 36 work in progress, 54 finished product, 72 debtors, and 60 days will be creditors payment. Creditors, why we reduced? Creditors is a benefit, creditors is a cost, benefit. Remaining all is a cost. So tell me, what is my net working capital cycle? Can you please tell me what is 177? Adi okay, what do you mean by that? Cash, to become cash, it takes how many days? 177. 365 by 177. 2 point? Almost how many? 2. And in your company, how many operating cycles are there? Worst company. Okay? And we have to wait for how many days? Answer. Almost half the year. And today if you put 1 rupee, that 1 rupee again come back to you after 6 months. We have to wait for that 1 rupee to come back. Lesser operating cycles are more operating cycles are? Lesser operating cycles are more operating cycles are? Lesser operating cycle. I told you. Financing is required, more financing is required, less financing. More financing, because your cash is blocked for how many days? 177 days, almost 6 months your money is getting blocked. Clear or not, everyone? Second year, is it developed? Whoa! Our development day. How much development? 6 days. They developed. So how much it was reduced to 171. Again, almost the same situation happened even in the second year. So how much it is? 171 days. Do you know what is 171 and 177? Half a year almost. Correct or not? And your cash will become cash after 6 months. And from this, what you have to understand, in your total year life, your cash will become cash only 2 times. That means 6 months bank has to finance your working capital. If you can increase that cycle, automatically reduction will be there. Sir, how to increase the cycle? They don't ask in question, but just example sake I will tell you. How to increase the, do you know what advice we can give? Number 1, reduce the raw material stock first. Means what? Go for just in time purchase. Go for costing it will be there. Just in time. Just in time means what? When a person comes and give order, then you do that. Rather than putting the stock. That way you can reduce 75 days. You can reduce how many days? 75 days you can plan. Work in progress. Do you know how to increase a work in progress? Understanding the bottlenecks. Understanding the bottle. If I bottle neck ani ponda. Actually bottle neck, but intention let us see. What is this? Bottle. I will open the cap and I will turn to the downward side. Water will flow or not? Answer. If the pressure in the water is 2 units in the upper part, there will be only half the pressure in the lower part because the bottle neck is making it to come slower. If the nozzle is very big, the opening is very big, automatically what will happen? Entire water will flow with speed. In your production cycle also, some machines are bottlenecks. You have to increase the bottleneck size. Once upon a time when I used to tell the costing, mechanization process, beautifully we used to explain. Always bottlenecks area should be increased. Sir, every production process there is a bottleneck. There is a, do you know what will happen? Process 1, process 2, process 3. Process 1 machine, speed. Process 2 is a bottleneck machine. You have to replace process 2 machine with a better bottleneck now. Now what will happen? Your 36 day may become 10 days only. Listening or not? Done. After that, what is the next one? After that, what is the next one? Don't put more stock. If you maintain more raw material, more finished goods will be there. If you are not maintaining the raw material, finished good stock will not be there. So 75 days become almost 5 days, and this 54 will become 4 to 5 days. Listening? After that, what is the next one? 72 days. Which fool has given that 72 days? Creditor. Credit cards also not given that much days. 40 days. Credit cards 48 days is a collection period by RBI. How many days I have given? 72 days I have given. Reduce it to half. Are you understanding? Next one. What is the next one? Creditors payment. Try to increase this. Lift kara de. You push it back again. 60, make it 70. Ask your creditors. If possible, beg them. So make it 60 to 70, 70 to 80. That you increase. In the talent is not there. For our debtors, we will give 72. For us, that fellow is giving 60. So if you can reduce like that, this 177 will become 70, 60, like that it will become. Then how many cycles you can operate? 6, 7 cycles you can. More. Can't you tell the number? 60 days it will become how many cycles? And more cycles. And more cycle. Okay, I understood. How many cycles you can operate? 6 cycles you can operate. And your money will be circulating for how many times? So you will take loan for 6 months. You will take loan only for 2 months. 2 months. Then interest cost will be 2 months cost. Like that you can reduce and maintain the company. You can develop the company. This is what the role of a finance manager in a company. With this we complete working capital estimates.